Our friends over at 8cap are hosting another trading competition for A1 trading fans. If you're interested in testing your skills against other traders in the community, here's how you can join. Head on over to contest.8cap.com, you can find the link down below, and select the A1 Trading Demo Competition. Registration is open now and ends on August 19th. The competition will also start on August 19th and ends on September 2nd. You have the chance to win prizes for first, second, and third place finishes. All trading will be done on demo accounts, so there's no risk involved in the competition. Sign up now for free and...
All right, guys, good morning. Welcome back to another live stream. Hope you're doing well. And let's get our vibey startup music going. It is Thursday, and today's a huge day. Arguably just as important or close to as important as all the inflation data, because today we get a very strong view of the consumer. Today, we've got retail sales this morning. We've also got employment data this morning. We have the jobless claims coming out. And we also have Walmart earnings after the closing bell for the stock market today. So all that to say, we get a pretty strong view of how the economy is looking today. We get a good view of retail sales. We get jobs data. So it's really big. Today's going to be huge. Possible movement in any direction. We will have to wait to see what the data tells us. We're going to be talking a little bit today about some of the indices. Take a look at some currencies, some reactions to the UK GDP data. You can actually see the pound is up this morning. And then you've got gold moving higher, kind of relighting the flame here a little bit. We'll talk about gold in just a moment. And you've got the SP500 continuing, or at least holding, the gains of the last few days. As we get started, guys, if you could do me a big favor, hit the thumbs up button, subscribe if you're new. It will do us a big favor if you hit the thumbs up button. It helps to get more people into the live stream talking trading. So let's jump into some charts. All right, so I want to start out taking a look at the dollar index, which this is such a loaded chart today. We will see how this plays out. So today, again, we have a lot of data points that could give the dollar, could take out the floor, or could give the dollar a little bit of support in the short run. So let's say the retail sales data comes out this morning and it's pretty strong. If the consumer is looking like it's in a good spot, you very well could see the dollar bounce a little bit. And if it comes out weak, we could see the dollar drop. Now, I don't know, and I always say this for newer viewers, I personally, or anybody else in this audience, we don't know for certain what's going to happen with the news data points. So trying to guess the direction and, YOLO trade on it is amateur hour at its finest, and reckless gambling at its worst. So we don't guess what's going to happen with data points. We don't bet the farm on, it's going up or down. That is actually gambling. So be careful out there. You're going to see other, traders or even content creators taking a different approach on that, but trying to guess the direction of the news before it comes out is a reckless game in my view. So we're going to take a look here. And also, by the way, adding buy stops and sell stops, also foolish, because again, the spread, let's say you put a buy stop right here, right? You're like, okay, I'm going to put a buy stop. And if it shoots up, I'll make money because it's going to shoot up. I'm going to get filled and I'll be instantly in profit. Well, the issue is where you actually get filled on your buy is like up here, because spreads go crazy on all brokerages. Brokerages are not dumb. In fact, good brokerages are run by very intelligent people, and very intelligent people aren't going to hand out free money and just write you a check because you put a buy stop or a sell stop. You got to think about this stuff. People who build brokerages, they've been doing this for many years. They're very intelligent. They're very good at risk management themselves. So my point with that is, if you think you're going to buy stop, sell stop, and make millions, man, I could go back to 2016, 2017, Trader Nick who was playing around with that idea and tell him, don't do that. You're going to lose money. And I did. So I'm telling you, that is I even built a system that would do that. I built an automated robot that would put a buy stop and a sell stop above and below news price with 15 seconds to go before news events. And it would cancel the other one and it would look for the best spreads. I mean, I built a robot that would do that stuff, only to realize, oh, wait, broker spreads, no matter which one you choose, they're not dummies. They widen the spread to protect themselves. So, yeah. Anyways, Ivan said just did the mentorship meeting. It was great. Good feedback. That's awesome, Ivan. Good to hear that. Love to see it. Guys, we got 5 minutes to go before retail sales come out. Retail sales on a month-over-month level are expected to come out 0.4%. We're expecting some positive growth in retail sales. Previously, it was at 0% month-over-month. And equally, if not more important, is the jobless claims here today. Unemployment claims come out in 5 minutes as well. And the forecast is for 236,000 unemployment claims. If this number comes out higher than expected, that would be weak for the dollar, and the stock market probably wouldn't love it. And if it comes out lower than expected, then that would be strong for the dollar, because that would indicate more people are, out there getting jobs, less people are filing for unemployment, right? So we've got those data points coming out in a few minutes, and that will tell us some interesting stuff about the state of the U.S. economy as we narrow the gap between now and our first rate cut expected in September. Is it going to be a 25 basis point cut, or is it going to be 50? That is the question that we're going to get more details on with this morning's news. All right, so let's take a look at some charts here. Dollar index again sitting at support, but we'll see if that support can hold. There's no, if you're looking at support, you're like, I'm buying the support level heavy. Well, we don't know yet if this support has any merit to it. If you get really, really not good jobs data and retail sales data, that support is going to look like a wonderful selling opportunity, right? Fundamentals are king for a reason. Fundamentals are more important in my view, even than price action. Price action is cool, powerful. Don't get me wrong. I'm not dissing price action because I use it. I'm just saying that in the face of fundamental economic data points, that's going to take the precedent over everything else. The Nikkei is up 1% here today, continuing its recovery. That's great news to see for global stock markets. The S&P 500 yesterday had a nice continuation of the last several days. Are we going to get another green day, or are we going to see some negative news here this morning? That is the question. Even if we get negative news, so I'm long in the S&P 500. If we get some not great news, the one positive is I'd be looking for a higher low in order to trail my stop loss into profit by some margin. But I am watching the NAS, the S&P, the Dow Jones, and I'm watching the Russell, which I have a small long position on as well. This one's been a little bit boring to watch, but let's see if the Russell can get some progress today. Gold, for those of you guys watching it, we are right back there, guys. We're right back to the highs. Found support off of this level here. And let's see with gold, I'd be really interested to see if we could get something like this. If you get a candle that looks like this today, if we get a all-time closing high, that would be awesome for gold. So we'll see. We'll watch gold today, because if you get like retail sales data coming in kind of weak and jobless claims coming in weak, that would be weak for the dollar, but really strong for gold, likely, because that would indicate lots of rate cuts are coming. If you get the double whammy, cool jobs data and a weak consumer read from the retail sales positioning or statistic, then I would say there's a very solid chance you see gold rip to a new high today. But again, we're going to wait to see what the data looks like and make a decision based on that. I'm not a scalper. I'm not a short-term day trader. I'm a swing trader. So what I'm looking for is I'm looking for confirmation signals on the economic data, and then I'm looking for simple price action entries to swing trade off of, not scalp or day trade. Now, nothing wrong with those things. It's just not my style. I'm a swing trader, and that's predominantly what I focus on. We study the daily charts because they are, in my view, some of the cleanest to watch. Daily in the 4-hour chart, very clean price action. Here's the 4-hour chart. You can kind of see We consolidated at the highs, pulled back, but buyer stepped in. Very curious to see how we react to this level this time around with some fresh data coming out in just 1 minute to go. So real quick, guys, I'm going to switch over to our full markets view just so we can keep an eye on everything. So let me just show you what you're looking at here. You've got the S&P 500, the Dow Jones, the NASDAQ, the US dollar, the euro dollar, pound dollar. Gold is in the top right, and oil is in the bottom right. Okay, so about 30 seconds to go here, guys. Let's see what we get. And maybe we can go ahead and roll our breaking news here. So be right back. All right. 15 seconds to go. Let's see what we've got here this morning. This is, for me, one of the more interesting data points of the week. So I'm very curious to see what we get. Should drop in just a few seconds. All right, the euro is lower initially. Dollar is higher. Dow Jones up. SPX up. NAS up. Gold flat. Okay, this is going to signal to me that retail sales were good and that unemployment claims were not too threatening. Let's see if that's correct. Let's see if I'm right about that. Retail sales good. Unemployment claims not too threatening. Okay, retail sales good. Part one. Let's see. It's a beautiful thing when this works out. There's retail sales. Heck yes. That is solid. 1%. Beautiful. Beautiful right there. And not so threatening. Okay, you know what we got to play. My new sound effect. Here we go. Heck yeah, dude. That's awesome. Beautiful figures here this morning. That is what the doctor ordered right there. Beautiful, beautiful, beautiful. Great news. S&P 500, NASDAQ are going to be up on that. That is very nice. The Russell just flew up. That is beautiful, guys. Absolutely beautiful. That was the data point this week I was waiting for. That was exactly what the doctor ordered. Strength from the consumer. They revised the previous number down. Absolutely gorgeous. I'm in love. Unemployment claims came in light. Jobs data, not a big deal. For the yen perma bulls, this is not your day. For the dollar bulls, it's probably mixed, right? Yeah, a little up for the dollar. Gold, not so positive. Why is gold not positive off that, guys? Again, retail sales being strong indicates health in the consumer. So worries go down. So gold's not particularly attractive if worries go down. And at the same time, unemployment claims came in light. So the state of the economy looks pretty good, right? Compared to where we were a week and a half ago. Oh my gosh, the market was like a crybaby. It was freaking out. And I just want to take this moment to kind of point out why you stay with a plan. I had a drawdown going on until the last week or two. But I stuck to that plan, and it's really paying dividends right now. Again, I lost a good chunk of money trying to buy too early on the NASDAQ dip. But I stuck to my plan, looked for setups, found the right ones, and again, absolutely killer. That's absolutely awesome. I love to see that. Again, that's going to keep SPX, NASDAQ, they look beautiful now on the bullish side. No reason to cut rates. Actually, I think what this is going to signal is 25 basis points is probably going to become very likely. Yields probably moved up, right? Did yields move up? Yes, they did. And I'm happy for this. So I have been in the camp for a long time on my channel. I'm not I used to call them rate cut junkies, right? I'm not somebody who shouts, we need rate cuts, we need rate cuts. I have been since 2023 talking about the idea that I would advocate for a no landing environment or a very, very slow rate cut process rather than a rapid one. A rapid rate cut process is because the economy is falling apart. You don't want that. And I've said that, when we went into 2024 and people were thinking 6 rate cuts by the end of the year. If you were watching this channel at that time, obviously I'm patting myself on the back here a little bit, but I was like, no, I think 3 or 2 is more appropriate. If things are doing well. If things are doing bad, that's when you get rapid rate cuts. And you don't want that, right? Rapid cuts to save the day is very different than slow rate cuts because we're doing okay and we can just bring rates down. You see what I mean? There's 2 different scenarios there. So this news today, you know what that tells me? That tells me that I was probably right in thinking, at least for now, things could change, probably right in thinking that the soft landing is still attainable and that story is not dead, right? Week and a half ago when the market was crying its eyes out, the story was soft landing is dead. We're going into oblivion. The carry trade unwind is going to kill us all. And you know what happened in that fear? This is the S&P 500 in a sound effect right now. Ready? I know, I already played this. I just think it sounds cool. The song, people asked about what the song is. I forget the name of it. I don't remember the name of it. I'm sorry. The sound effect is so sick. I know, Darnell. I'm sorry. It's so nerdy, but it just sounds so cool to me. I don't know what the original sound effect is from. The song actually uses that sound effect, but that dude's voice is so beast mode. I just want to know what it is or where it's from. I don't know myself. I just know that I've heard the song that, yeah. Anyways, look at that, guys. The Russell's up almost 2%. That's absolutely gorgeous. Absolutely gorgeous. Apply filter. Philly Fed Manufacturing Index. What about it? Empire State Manufacturing came in better than expected here, worse than expected here. Kind of a mix between those 2 figures that came out. But really, I mean, you couldn't have asked for a better figure today. Hanzo from Overwatch. Oh, okay. It's from Overwatch. See, I've never played Overwatch. The voice is from Overwatch. Let's play it one more time. It's so cool. I'm such a nerd. I don't care. You know what I thought it was from? I thought it was from like that game For Honor. It sounds like it would be in that game. I have not played that game either. How do bonds and yields relate to all of these? Why are yields up? Yields are up because the strength in the consumer and unemployment data that came out this morning tells the bond market, oh, the Fed's not going to be in any rush to cut rates. So what do? They sell bonds because bonds are only attractive if there's like scarcity, right? So if there's scarcity in bonds at current levels, like meaning they're going to cut rates, so you got to get the bonds right now before those rates change, bonds go up. But if it's the opposite effect where, oh, they're not going to cut rates anytime soon, or they're going to cut rates very, very slowly, like there's no rush to buy bonds, then people sell bonds. Absolutely beautiful. We'll see if this data can hold. NASDAQ is one of my more lovely trades recently. But you know what the real winner for my account is SMH. SMH, yeah, that's doing just fine today. SMH is the semiconductors ETF. And sometimes people ask me, Nick, why don't you trade futures? It's because I really like to trade ETFs. There's specific ETFs that I really like above and above the rest kind of thing. So SMH is, like Nvidia and AMD and chips and things like that. Not potato chips, but like computer chips, those companies do very well in a cyclically, like a positive environment, like a good economy environment where demand for technology is great. And, when you have that strong demand for computer chips, it can be a very positive thing. Guys, I just want to mention for a second here. Let me make sure. Okay. All right. So I got to do my plug really quick. If you are not already in our Discord group, let me just give my quick pitch to you. You ready? This is a sales pitch. So if you don't want to hear the sales pitch, I understand. But hear me out. Give me a shot. So inside of our Discord room, we share all of the trades that we're taking, fully transparent, full breakdowns. And I want to show you something else. This is important that I include this in this conversation. All right, you guys ready for my sales pitch? Here's my sales pitch. Okay. So inside of our group, I share every trade that I take with full explanations, breakdowns, commentary on it, updates, entries, exits, stop losses, everything like that. But the most important thing, and what distinguishes our service above the rest of the other types of services you're going to see out there, there are other groups that do this, but very, very few will actually share their trades that they're taking on live regulated brokerages and be fully transparent about what they're doing in the market. So here's my offer for you guys. Inside of the group, again, we share every trade that we're taking. This is a live US regulated brokerage. No nonsense, no fake stuff, no demo accounts, no MetaTrader 4 gimmicks. The offer that I'm going to give you with joining our service is that you see a real, over my shoulder, as well as the rest of our team, trading experience. If that is something that would be beneficial to you, the reason I show you that is that because I offer this service and this is a paid for service, I charge money to people who want to join a group like this. The reason I show you this is for the tranquility of somebody who's like, I don't know, is it actually worth it? Well, I'll ask you, is it worth it if you're going to pay for someone's room, education, service, for them to show you a live brokerage and show that they actually do what they talk about? I like how Nick gives a disclaimer before he gives out a sales pitch. I got nothing to hide, man. I sell a really good service. I should say my team and we have put together a very good service. We do what we say we do. We are transparent in the markets. And the purpose of the group is to show you fully all of the trades that we're taking, entries, exits, analysis, breakdowns. You get them sent directly to your phone. So the reason I say all that is if you're somebody interested in getting access to this service, we are currently doing a 35% off sale, and it is a no BS service. Transparency is all we're built on. That is the core integral part of A1 Trading, which is my business. If you'd like to get access to our room, it is a paid for service. It is worth the money. I'm telling you, if I could go back to my beginning of my trading career and pay for this one-time price to join a group like this, it's one time. You don't pay every month. It's one-off fee to join the group, get in on the action, take it seriously, and learn. If I could go back and sell this service to baby trader Nick, it would be worth every penny. And I genuinely, I mean that so honestly. So my purpose with sharing that is if you'd like to see all the trades we're taking, the coaching webinars, get access to a very, very wholesome trading community where we have conversations in our chat room day in, day out. If that sounds like it's right for you, Come join us. The sale is ending. It is currently 35% off. Here's how you can do so. Send us a direct message using the link that just got dropped on the screen and in the chat right now. You can speak directly to a member of my staff who will get you set up with a membership for that discount price. Again, we don't take winners all the time. I don't claim that. Trading is hard. But if you're serious about this stuff, I'm telling you, it is worth the money. It is worth the money. So again, it's 35% off, JMA. You have to get the calculation and the discount information from our team. They have it all on standby. But again, just message us and someone from our staff will get you set up with that. Play the sound again for your winning trade. All right, one more time. Oh man, that sound is so funny. I'm not gonna lie. Did I listen to that song with the speakers blaring in my car? Yes. Will I do it again? Probably will do it again. What's going on with gold? Yeah, gold, look at that, rejecting the highs. This actually kind of makes sense, guys. I hate to say it because I am bullish on gold. I was looking for that breakout today. But gold selling up here, or at least rejecting the highs, makes a lot of sense when you think about like, okay, we just had really good sigh of relief economic data that just told a lot of skeptics, a lot of people who are nervous about the economy, oh, things are okay. We just had strong retail sales data and we just had strong employment figures. So people who were worried that the economy was falling apart, they probably just covered their short positions. That's probably what just happened. Absolute nerd, Nick. You are so right. I am an absolute nerd. You know what's weird though? Like genuinely, my nerdiness is actually for like economics and markets. I'm not like a huge gamer. I'm not like a huge television person. I think Chandler and James would give me those guys are like movie buffs. I'm not a movie buff. I'd say I'm like a very amateur, movies guy. But my nerdiness shows clearly in the markets. It doesn't mean I'm like always right in the markets either. I'm just saying like I just like learning. Even if I'm not trading a certain market, I love to go like learn. I just spent the last like week listening every evening about like the Brazilian economy and just like how it functions. I think that stuff is fascinating. Anyways, guys, we're going to take just a quick break. I want to bring some more people into this conversation. We got some powerhouse players standing by. We got Miko and Marco for Technical Thursdays. I'd love to get their thoughts on everything moving here. So stick around. We're going to thank our sponsors, and we'll be right back with those guys just after this. Check it out. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show. All right, and we're back with Miko and Marco. What's up, guys? Happy Thursday to you.
Hello, what's up?
Good to have you back. Again, another really busy week. Lots of volatility. We had a lot of different data points that have come out behind us now this week. So I think it's perfect timing to chat with you guys because now, a lot of the news spikes have formed, if they're going to form for the week. And maybe there's some setups or ideas that we could talk about going into the rest of the week. I guess to start us off, Marco, you want to walk us through just a couple of, I know you have, Marco's a great example for audience listeners who has a very select list of charts that he focuses on. So I'd love if you could just walk us through some of your high level kind of thoughts on the markets right now.
Yeah, sure. So last few days have been very active with the dollar news. So now we are printing a big drop on the euro and the US dollar. We did have a very nice uptrend right here, which unfortunately did not produce any high probability entries for me, but now it's dropping heavily. So if this can sustain itself, print one more bearish candle, I would be very interested in looking for sell setups. although it's not looking anything, it's not looking very special, I would have to say. EJ is, for me, looking very ascending. So after I see an ascending structure like this one, I do expect the price to reverse to the downside. So what I want to see is the ascending channel to continue a bit more and then start dropping. Right now, not seeing any high probability patterns, to be honest. Aussie and US dollar actually took a trade here, a flag buy, and just got taken out for a loss. So it was with a 10 pip stop loss. We saw a nice, small, tight descending channel, and then price reversed to the upside with some nice momentum, and then a quick, tight flag, exactly how I like it. Took it on the blue candle, and then basically got taken out with the news. And yeah, we had a lot of news. This was a news candle. This one was, I think, PPI or CPI, not sure. And this one was now retail sales. Currently not showing me much, unfortunately. Since I got taken out of the trade, I'm going to be more patient on this particular currency pair. AJ was in a very flat range. Now it's starting to impulse up. Again, this is just the first push out of a range. It is not convincing just yet. I want to see the next candle continue with the bullish pressure, and then we're game on for some buy setups. Pound, just flat in this area, flat and range bound. And NJ is also stuck between the low and the high. For me, it is flat and range bound. So yeah, my eyes are on mostly the euro pairs right now. I want to see some nice formations on the euro US dollar and on the euro Japanese yen, but I definitely like the news. The news is a good catalyst for a trend to start. So without news, I would not make nearly as much percentage as I would with some like major news releases.
That makes a lot of sense because, you know, even if you are a purely technical trader, as you guys both are, like you notice or you focus heavily on the timings of like when these high impact events can kick off momentum, can get things started in a certain direction, and oftentimes lead to multi-day trends. I mean, a quick example of that just recently was the move on NFP last Friday. So if you remember, last Friday is this big red candle on the dollar index, and it led to a huge move lower. It continued to sell off throughout the entire day. The trading action throughout the day, just bearish, bearish, bearish. And then Monday came out, and what did it do? It kept going. So sometimes, you know, the news event trigger can result in multiple days and sometimes even weeks of trends in a certain direction. So, you know, very interesting to see that. Miko, speaking of the dollar index, what are your thoughts on this right now? We've got the dollar bouncing a little bit here off of the lows. I think we spoke a few days back talking about, you know, how this support level, we're both watching it. What are your thoughts on the dollar index?
So yeah, I'm pretty bearish on the dollar. I'm personally only looking to favor more weakness with the dollar, so looking at some buys on euro and pound. But yeah, I mean, it has been moving well in the grand scheme of things in the bigger picture. It's kind of just like a big consolidation. But what I'm looking at really is that we've got the high around here, we've got the low around here. This is the weekly chart, and the market is basically bouncing between these two levels: 106 roughly, 101, around 101. So I'm looking to see if we can make a move back to the lower end. So that's kind of where I'm looking to take the dollar, where I'm expecting it to move. At the moment, we are testing some support right now, which we're finding a little bit difficult to break through. But I don't mind that, because if we do see some upside, I think that just gives me a better opportunity for some shorts or for some longs in euro. Because we did mention this level here last week. We didn't quite get there because I was looking to short or buy euro from expecting downside on the dollar, but we didn't quite make it there. We fell over, but of course after the news right now we're looking pretty bullish. So I'm not looking to expect downside just yet, but if we do keep pushing high, especially to 103, 800 or 104, I think that's a really nice place, and we could be in for a big move down. So I'm really liking downside in dollar. The chart doesn't look pretty good, but if this trend here decides it wants to continue, I think we could be in for another lower high, maybe a retest of that level for some downside. I'm looking for us to come back into that low there.
Yeah, I would not be surprised if there was some reaction to that 104 level. Another
Mhm.
question for you is, I think last time we spoke, we were talking a little bit about the euro. Marco just had the euro pulled up, talking about how we've seen big move lower, and I think correct me if I'm wrong, but I think we were both talking a little bit about maybe looking for the pullback play on the euro. Is this setting up for you anytime soon, or if you're looking at the euro, where would you
Mhm.
be interested in it?
Yeah, so I'm pretty sure it's the same setup, same area I'm looking at because yeah, so I'm looking at the high here. I think last week we were trading around here, kind of moving sideways, and I was pointing out this area here. We didn't quite make it, unfortunately. But yeah, we're steaming ahead into this level here. So this is my level of interest as well. Pretty big drop. So I'm going to see what we can do there because I'm very much of a trader who will wait for price to get to that level and start to react before I get into the move, get into the trade. So I want to see some wicks developing here before I do take the position. But that is where I'm looking to take a long and again see if the trend can continue because on the daily chart, although euro hasn't been moving great, we are starting to see some higher highs and higher lows here. So again, my plan of action is just looking for that to continue really for another move higher, and it's in the same direction as the dollar if my analysis there plays out too. So yeah, I'm liking Euro USD to the upside. It's dropping pretty hard, so we'll see what happens there because I don't know. Maybe it just keeps falling for the rest of the day. But if we can see some reactions there, I will be interested.
Sure. I have a question for you, Marco. A big
Mhm.
chart of recent focus for global markets has been all about the Japanese yen. I mentioned that NFP report that really spooked investors and, really triggered for many people a rush to go buy the Japanese yen without getting into the deep fundamentals. Basically, people buy the yen when they're scared. And that really started to happen big time the last few weeks. And for now seems to have paused, and maybe even in with some of this good news today, we see some demand to short the yen again, to sell it, to undo that trade once
Mhm.
more.
Mhm.
My thought or question for you is, has this momentum, based on how you see the charts, is the momentum shifting back bullish, or is this big move just setting up for a follow through big move? What do you think?
Well, it all depends on the time frame. So I'm going to
Mhm.
do the euro and the Japanese yen. But basically, on the 1 hour, it's starting to print bullish, especially with this last candle. We're starting to show a ascending channel and then an impulse up, which is a pair characteristic of this currency pair. This can spark an uptrend, but when you go to the daily, um, yeah, I would say bullish momentum is starting to kick in on the daily as well. But if I go to the US dollar and the Japanese yen on the daily, it still looks like the sellers are in control, in my personal opinion, because the big bearish legs are just far more bigger than these two bullish ones, especially because this one is a live candle and can still print bearish if it wants to. On the 1 hour for the dollar yen, it was very flat and range bound, and this is just a single impulse out of a range, so it is not giving me a very bullish confirmation. The bullish confirmation for me would be if this continues up. So this can easily just retrace back down, and I would say the case for the US dollar and the Japanese yen is still bearish just by gauging the momentum and looking at the technicals.
Sure. Yeah, and again, that's one of the most interesting charts right now, just because of how much tension there was to buy the Japanese yen suddenly. That I mean, for the global kind of banks and hedge funds trades that go on, that was a very big one to watch. We saw that in the commitment of traders data. There was huge buying of the Japanese yen, or
Mhm.
more, practically actually short covering of the Japanese yen, and that seems to have slowed. And some of the good news today is, again, the state of the economy is not in shambles, and that, or actually, probably, I would argue, far from that. The economy actually looks pretty good, and that is calming some nerves. Same question to you, Miko: is the yen? Are some of these pairs setting up for short side opportunities, or is there a lot more upside to come?
Well, I'm still short side on on the yen pairs for now.
Mm.
It has been very corrective on this move up higher. So I like that because it's not shooting off straight away, although things can change if this continues. There are a few areas I'm looking at. They're quite far up. So I kind of want this to speed up a little bit, but I'm well aware that it might just be a shorter term move because maybe the yen pairs still do have a lot more upside left in them. But again, if I'm looking for a trade that might run for 50 to 100 pips, I can still bank what I need from there and then see what happens next. But I particularly like dollar yen around this area. Euro yen looks good to me as well. This was not too far away from this low here too. So I'm just going to be waiting to see how we get there. So far, it's moving nice because this is where all the momentum lies. So the fact that we're taking our time and moving like this normally means that this is a pullback. Of course, if we suddenly burst out and things will change, but if we keep up that kind of corrective movement, that will tell me that most likely this is a pullback. So I'm looking for my shorts. New Zealand yen looks good as well. It's got a really big level over here on the left. So they're all very much doing the same thing. I'm just going to pick which pair looks the best to me and just trade that one because they'll all either keep pushing up or fall together. So there's no point in trading all of them. But at the moment, those three I do like.
I like how you broke that down too with like the dollar yen, pointing out that, and for the euro yen, that there, are some big key levels of resistance, but there's some distance away from them. That to me kind of shows one of the cool things about trading is like, even if you have two people, like one person's bullish, one person is bearish, maybe in the short run, the bullish trader could kind of trade their way up to that level on like the 1 hour, the 4 hour chart, make money on the way up. And then if the bearish person is right, and you do start to see the bigger kind of fall down that we saw kind of pick up again, they could be right from that area. That's kind of the beauty of different strategies, time zones, or time frames, and risk management. So cool stuff there for sure. Next question for you guys is the metals. Marco, gold. What a turnaround here today. Gold was tapping on the all-time highs here the last few days, very close to that. And now with, from a fundamentals perspective, I think today easily kind of explains the change in sentiment because, again, a lot of economic good news is usually not considered very bullish for gold. Just because, again, if the state of the economy is good, people are going to buy stocks. They're going to buy bonds. They're going to buy, assets of that nature. But then if people are scared about the economy, they might buy gold. So that flush to the downside here today kind of makes sense. But you got to remember on the daily chart, we're still very, very, strong here. Curious your thoughts. A big rejection here this morning. Does gold have room to come down lower?
Yeah, sure. So I just want to quickly touch on the point that you mentioned with multiple time frames. Like I'm bullish on the 1 hour time frame on EJ, but I only need like a 20 or 30 pip move. So let's say I get the next candle going up and I get like a flag formation. I'll just get in with a small stop loss. And let's say, 20 pips, something like that. And I just need like a 2-to-1 or a 3-to-1. But on the daily, it can reject, as you guys said, from, let's say, this level up here. So yeah, it doesn't really matter if it's going up or down. It only matters on what time frame are you focusing on and which levels are you targeting. So we can make money on multiple time frames, even if the overall bias is, let's say, to go short. You can still buy it on the 1 hour. So just a quick comment on that.
Yeah.
For gold on the daily, yeah, it tried to break up but rejected. It couldn't. For me, this is still stuck in this range. Still, I cannot make a decision if it's bullish or bearish until we get a breakout of this level or of this level, or breakdown of this level. If I go to the 4 hour, a bit range bound as well, but 1 hour is probably going to be a bit bearish. And yes, it is. So my conclusion would be that it just doesn't really know what it wants to do right now. Again, I have my key levels. Until it breaks them, it is the same as Bitcoin. So I cannot make a technical decision because it still looks pretty consolidated in this general area.
Sure. Yeah. And again, I would agree on a technical front and honestly, even a fundamental front. There's some mixed sentiment that came in here today with the retail sales coming in nice and strong. The picture here little bit muddied for fundamental bullishness as well. I'm not necessarily bearish, but yeah, I think a sideways choppy market for gold does kind of make sense for now. Anyways, same question to you, Miko, with the metals, silver or gold. Any thoughts here? Any setups that you're watching?
So yeah, I've been waiting for gold to break the high, and I was hoping for that today, but it doesn't look like I'll be seeing that at the moment. But yeah, gold, like Marcus says, quite difficult to work out what price is doing. I mean, overall, we are still bullish going to the higher time frames, the weekly, the monthly. Momentum is still up. So from a technical perspective, I'll still be bullish alone from that point of view. But in terms of finding a good place to buy, I'm not really seeing anything right now, apart from the level that we created there. One rejection, second, and a third one there. I can see prices really focused on that area. So I was hoping for a big breakout, and I still am. It might just mean we go down first for a bit before we get the breakout. So hopefully we can get a breakout at some stage, and then I'll be looking for some pullbacks on this area, because that's the only kind of clear-cut opportunity I can see on gold for now. And as gold falls down here, I'm just not really interested, because I don't really see a clear-cut area to get involved, unless maybe you can mark at some support there, but that looks a lot better to me. So that's where I'll focus my attention. And in terms of silver, there's a really big level just underneath us, which I was hoping we could fall into this week. We haven't quite done that yet either, but really big level. We've mentioned this level before, around 26. So I think this is a good level where silver could possibly go bullish from. I'm looking at the larger structure and how price is moving. Push, pullback, push, pullback, push. Could see another pullback for another move, and this is a really good level for possibly some really long-term buys as well. But hopefully maybe silver has one more move down, and then I can look at some buys later on. But still bullish, just finding some areas to get involved.
Yeah, no, I like silver as well, especially if we do get back down to those 26 levels. I mean, silver to me just is kind of something I'm permanently on the bullish side of. Same thing with gold. I mean, I really just don't love shorting these things unless you have a really strong conviction that you think the global economy is just going to enter terrible recession, which is possible. But think about how rare that is, that you actually get those, massive recession situations. They're pretty rare. So generally, I'm more on the bullish side of metals and indices for that reason. You just kind of have to think about it. Like if you think if I'm, 75% of the time I'm bearish on indices or metals, you're really fighting up against the flow of the current, right? These things generally go up, and you have to have a really good reason to be bearish on that. Speaking of indices, I mean, this is another really good example of that. So a couple of weeks ago, I told you guys I was going through a bit of a drawdown in some of my trades, and I was super early, and you guys actually even were pointing this out. We were losing that momentum, and I took a couple buy attempts on the NASDAQ. I was definitely too early. I ended up waiting a little bit more, finally got the right entry, and the S&P 500 has finally given me that bounce trade that I was looking for. I was just way too early to it. I'm still in a drawdown technically, but I've recovered a lot of it just from this move. Really solid response to some of the recent data that kind of saved the day. Again, I mentioned that NFP report, which caused a lot of volatility in the dollar and metals and everything, also caused a ton of volatility because stock investors were like, if we're going to go into a big old recession, get me the heck out of stocks. And, for a little bit there, briefly, as I just mentioned with these things, the flow of the current was to the downside. But generally, the flow is to the upside. So I still fundamentally liked it, even though price action was kind of disagreeing with me. And that ended up being a decent call for my strategy. But I'm curious to see what you guys think on the indices, S&P 500, NASDAQ. Let's go, Marco. What are your thoughts on these? Any of them, or just broadly speaking?
So the S&P is currently doing like a 2020 move where had a massive drop and then is now recovering extremely quickly, I would say. But by looking at the whole picture, I mean, we kind of even thought that this was just going to be a correction before we continue with the overall uptrend. So this retrace just a visual comparison to the whole uptrend, it is not that massive. So
Yeah, no, exactly.
yeah, I'm kind of not surprised that we had a bounce now, and it's great to see because I love when the S&P is bullish. As of now, it is printing a V reversal pattern, a very clean one, I have to say, and that is a bullish pattern in my book. You usually get a range, and then you get an uptrend from there. So the daily looks very bullish for me personally. The 4-hour in an uptrend as well, and the 1-hour looks pretty good. 1-hour looks really nice. Really, here is another V reversal and then an uptrend. So nice big blue legs. So yeah, I would be very bullish on the S&P right now. Hopefully this was just a big correction before we, as I said, continue with the overall uptrend.
Yep, makes sense. And again, as you mentioned, the 2020 environment, you could also compare it to the situation in the VIX that we saw during that time. Look at, if we can just show my screen for a second, Chandler. The crazy thing about the VIX here is that we shot straight up and then we shot straight back down, right? So volatility got super high, fear got super high, and then came right back down. That was that, again, jobs print scared everybody. People got a little overwhelmed, and then they flipped to, seeing good numbers and changing the mind. Same question to you, Miko, is are the indices, are they back? Are they still wobbly in your view? What are your thoughts?
Yeah, I like the indices, especially how they close on the week for the previous week. Really big wicks to the downside. And sometimes when you just look at the bigger time frames, particularly the weekly, particularly the monthly as well, it kind of just puts things in perspective and how price is moving. Because you look at the hourly, the 4-hour, maybe the daily as well, price might be melting and things might be a bit fearful. But in the grand scheme of things, especially in the weekly chart, this uptrend still looks very, very smooth to me. And I think there's a good chance we can make our way back to the high. This is the NAS, looking at the S&P, equally the same thing there as well. And, US 30, that's still looking very, very bullish to me as well. So, yeah, I'll be expecting momentum to take us higher. I think if you're looking to trade the indices, maybe there might be a bit of downside as we come back into some of these areas here on the left. But to me, the bigger move probably still is back to the high. And maybe we go and see some new highs as well.
Yep, should be interesting to see. All right, we got to get to our last one today, which is always Bitcoin. So I would have actually thought Bitcoin would be up a little bit more today with the kind of round of good news, but I guess it is up from its lows still like 20%, which is an insane move in just a 2-week period or so. Marco, what are your thoughts? Bitcoin, are we going to see a breakout here at some point, or is it just staying stuck for a while?
Oh, and also I have a question about the wicks. So how come with all this buying on the S&P, I mean, it's quick buying, how come it's not going up? Instead, the wicks is slowing down. Shouldn't it be going up as well with a lot of buying pressure?
So the VIX, yeah, that's a really good question. The VIX is it's a bit of a confusing, and admittedly, I don't fully understand the calculation. The calculation is like really complex, and it was designed by, it's like a bunch of mathematics basically looking at options, the options market, and all this stuff. But basically the VIX measures the forward-looking yearly outlook of like where the markets, what the range of potential direction on the VIX could be. So if you get a VIX reading of like 30% or 30, let's say, that's kind of signaling like there could be a range of 30% in the next year. And if you get a 12, that's telling you like the range going out for the next year is like expected to be much tighter. And the reason that the VIX will go down, even if there's an aggressive up day, is because an aggressive up day usually means, there's some confidence in the stock market. We may just start to see things returning back to that chugging slow uptrend. But if you get a big drop, it tells like, we could snap back tomorrow, like a day like today, as we've been seeing recently, or we could continue to plummet. And this range going forward is huge compared to a big up day. Says the range going forward is probably going to be more narrow. So hopefully that answers. I had that same question. It's pretty confusing.
And it makes sense because the markets slowly go up, but when they drop, it's like an extremely rapid move. So I get it. Thank you.
And,
Very
and
interesting.
that's the dangers of or the temptations of the short side of the indices is if you catch a good short position on the indices,
Mhm.
it is like a hard drug. So you got to be careful of that stuff. Anyways, keep going. Talking about Bitcoin.
Yeah, sure. So for Bitcoin, let me bring it up. Let's go to the daily chart. Kind of bouncing off the level. It tried to break down, but for me, the story is the same as gold. I have my key levels. Of course, the major high right here, and now this is the major low. It has been trying to push down. I mean, that's not really a great thing to see. It would be better if the pressure was building to the upside, as with gold, for example. But this is trying to break lower, and then it's printing wicks and heavily rejecting. So again, the technicals are telling me to be more patient and that further ranging price action is expected. What am I waiting for? I'm waiting for something like on Ethereum. On Ethereum, we actually had a drop, a break of the low of these lows with this daily candle, and then the next daily candle actually continued. So for me, Ethereum is looking much more bearish than Bitcoin, and I would expect more downside here. I could make a clear bias out of this chart, but Bitcoin is still pretty flat and range bound in this area. So yeah, waiting for those key levels to break.
Really interesting. We'll just have to see if it can get a move going. I mean, one thing I wanted to mention to you guys about this is on the stock market, they actually passed and got set up some Ethereum ETFs. ETHA is an iShares Ethereum ETF. So,
Nice.
when this happened on the Bitcoin front, IBIT, what actually ended up happening is initially Bitcoin dropped, and then the adoption of BlackRock and the NASDAQ bringing these things into the stock market world for money managers and stuff. A lot of people thought it was a negative. They're like, oh, it's taking away the purpose. The regulation is a bad thing. But you got to also think if you bring it to the public markets and make it very accessible, it's also, in my view, kind of a bullish thing because it makes it, accessible to large firms that may want to buy this stuff and it would not have to set up wallets and things like that. Just let a corporation kind of handle that side. Similar to GLD is like a way to buy gold on the stock market without actually buying or trading gold futures. You can just stick this in your portfolio if that's something you want. So there is a vehicle for everything. Miko, same question to you. Bitcoin, any setups or ideas here?
So yeah, I'm still looking at Bitcoin on the daily with that descending channel because price is respecting it very, very well. At the moment, kind of just in the middle of that range. So I'm not trying to inspect price too much because really this is where we see opportunities, whether you want to sell the high or buy the low or wait for a breakout. So I'm kind of just waiting to see what the next move is for Bitcoin. Do we make a move back to the high to the top of the channel, or do we push back down to the low? Naturally, of course, price is doing a really good job at respecting the low, so there could be some nice buy opportunities. But should we break through this, that's where Bitcoin can really open up to the downside and possibly see a bigger retracement. We're still failing at the highs there, so that's not particularly great for Bitcoin. That might mean a bigger pullback before maybe a bigger move later on. But for now, I'm just going to see how price moves within the range. If we come back to the low, could be some nice buys. Equally, could be some nice sells at the high. And if we do eventually see a breakout past this point here, that's when I think the next kind of bull run will happen.
Okay, amazing. Yeah, I think, last note on this before I let you guys go, I want to mention about Bitcoin. I was talking to Frank, who is another trader in our office. We were talking a little bit about the 2021 phase where we saw in Bitcoin and what kind of led up to that. And if you remember during that time, we've talked about this before, the risk curve got more and more aggressive. And I think that if the stock market continues to go up, if the stock market gets back to highs, as we just discussed together, if we start seeing new all-time highs yet again, and we get further and further away from that 2022 bear market, and basically, if people start to get more greedy, more fully convinced, that the stock market and that the risk assets of the world are going to go up, I think you're probably going to see a massive bull run on crypto, because that is the environment where people are like overzealous and they're just absolutely feeling invincible, like in 2021, where money was cheap. You could borrow money at low rates. People were getting stimulus checks. They were feeling good. The stock market was already up, so they were looking for something else to buy, and they went even more risky with Bitcoin, and eventually went even more risky with NFTs. I don't think that we've actually reached that point in the stock market. Some people would say, oh, we've reached the, we're already in a bubble. It's already too hyped. I would say that, by the time bubbles can go on for so long. They can go on for so much time. So if you're somebody who likes crypto, my opinion is that the next big round, as you've just mentioned, Miko, comes after you get those big breaks and bigger pushes to the upside. So anyways, thank you guys both for coming on the show. I appreciate your commentary, both on the technical front and all these different charts, some of which you don't even trade. I appreciate you going through them for our audience. And as a big thank you, guys, we've dropped the links to Miko and Marco's YouTube channels in the live chat right now. If you guys would like to go support their pages, follow them on social medias, do us a big favor, please go do that. It takes 2 seconds to subscribe and support their channel. They come on, take a time out of their own day to do this and share ideas with us. So big thank you to both of you guys for coming on, and have a great rest of your day. We'll see you next time.
Yeah,
Appreciate
no worries. See you.
See ya.
Guys.
Goodbye.
All right. Always good to have those guys on. Again, super knowledgeable. Love to hear their thoughts. And I think it really does bring a good, a diverse like thought sharing stream. That's the whole purpose of having other people join the show or even take over the show. We're going to have our next guest take over in just a moment. We got Forex James coming on, which is awesome. Always good to have different thoughts sharing. And I think that, you might have a bias about something when you join the show here or you watch the show, and then you hear somebody who disagrees with you. And I love listening to people who disagree with me in the markets. And I think it's better for you to listen to somebody who has a different point of view on the markets than it is to just echo chamber your way into, only ever hearing what you want to hear, right? Gold views. Gold looks a little bit rough. I'm not particularly excited about it after today. I know a lot of traders are, wondering, why did it just drop? It just dropped because economic data this morning showed some real confidence in the economy. Confidence in the economy squeezes out the fear trade a little bit, and that doesn't help gold's case. Remember, gold does well when people are nervous about the economy. It does well when central banks are rapidly printing money to save themselves. They're cutting interest rates rapidly. Gold does well when things are kind of falling apart. So gold's near at all-time highs, and then we get really good economic data points. I'm not bearish on gold. I'm not saying, oh, I'm just shorting it from here. I still think it has a bullish uptrend that is worth watching. But today's data points definitely deserve to back off the all-time highs a little bit. And I'm probably only a buyer if we get a huge break through the highs and retesting that area on some sort of new data points, or a bigger retracement down to like 2360, where I think there's a better deal. So that's my opinion on gold. So we'll have to see on that one. I am personally most convicted on the indices. I've been long on them for several weeks. I've been too early to the dip. Then I bought the dip, got some really, really good entries during the chaos last week. I mentioned this. The put call ratio has been something I've been talking about a lot. Put call ratio peaked, got really, really bearish. Retail traders, the average, options trader was out there buying puts like crazy, super bearish on the market. And that was actually a very good signal to actually look for long setups and go against the crowd on that. Put to call ratio is quickly becoming one of my favorite indicators. By using this data point, I really picked out certain areas of the market based on looking at the put call ratio that ended up making a lot of money for me. So I am, I was early to the trade, and it's not a perfect indicator, as nothing is, but watching the put call ratio is really cool. I really, really like it because you get straight up volume on puts and calls in an equation like this. So when people are getting really bullish, they buy lots of calls. When people are getting overly bearish, they buy lots of puts. And that can sometimes be a good signal to either be contrarian or at the very least like trim stops, take some partial positions off, whatever you want to do. But really cool to get the put call ratio on your screen. If you don't have it and you'd like to get access to the Edge Finder, we'll drop a link here to try it for 30 days. And also, this is the last call. We're getting close to the end here of our 35% off discount on our gold VIP memberships. You can get access to all of the trades being shared by myself and my team. If you'd like to see our trades in depth, sent directly to your phone, sent directly to your desktop on our Discord server, you can sign up for that by clicking the first link in the description to chat with a member of our team, or we've got a link in the chat right now where you can speak directly to a member of our staff about our current discounts. And if you have any questions or you'd like to see our track record, etc., you can do so by chatting with a rep on my team now. Again, link is in the chat. All right, guys, we got our next show guest taking over for a little bit. We got host Forex James taking over the show, going to go through some charts with you. So stick around. We're going to drop the link to his socials here in the chat for you to find him, as well as their website, elitetraders.io. Stick around. James got the show right after this quick break.
Attention, A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Hello. How is everyone doing? Hope you're all having a good day. So, retail sales came out really, really nicely at 1%, I think it was. I need to just double check. But yeah, the retail sales came out. The reaction on the dollar has been pretty crazy, really. So if we see today's candle, what are we up now? 0.6% on the day on the dollar, which is really good. So we've seen a nice market reaction on this one. Luckily, I was positioned really nicely actually to capitalize on this. So the EuroCAD position is still running. I've been showing this one quite a lot recently based on a lot of seasonality. So initial entry, then scaled in. Unfortunately, the scale in here was timed really, really poorly. So we suffered some drawdown on this one. However, managed to get a really nice scale in just before the news as we bounced off the fib level through here. So in 3 positions on EuroCAD at the moment, targeting the 1.46 level, and maybe we can get lower than that eventually. But this is a trade for probably the rest of the month, possibly into early September. But yeah, there's not too much behind this one that I can really share right now. It's just, seasonality. You like my DXY call up yesterday? Surely retails were selling dollar. Yeah, I mean, to be honest, if I'm honest about the dollar, I actually think retails were buying. So it's very, very clear uptrend really on the higher timeframes. And retail tends to follow a lot of basic technicals. They often buy downtrends, so you can see the immediate or the very recent trend. So if we look here, was down, so they were more than likely trying to buy this. So I don't know. Yeah, I'm not sure really how retail is positioned, actually. I can check that later. So dollar yen, this one is moving very nicely as well. Obviously, after retail sales, we got some dollar strength. The yen's weakened quite a lot as well. So we can see that here. So yeah, dollar yen, really, really nice position so far. Looking to get to 155, but I'm not sure. That's more of an end of year target. So it might be a bit of a slow mover. Australian dollar yen as well, almost back to my second entry, which will be nice to get out of this position. Nasdaq also heading to the upside. So this position was very, very simple. If you look at the weekly, we had a really nice pin bar or hammer, whatever whatever these candles are called here. Daily time frame bounced off the 200 moving average. So a little bit of a slowdown here, and I didn't see the slowdown on this daily time frame as being a reversal. I saw it as just a very, standard lack of momentum before we potentially headed back to the upside, which is now what we're seeing. So yeah, Nasdaq's a smooth one. I think that's really it. The dollar Mexican peso, again, this was a signal in the Discord, but suffered some drawdown. We almost got stopped out actually. And now, retail sales came in along with the CPI yesterday, and yeah, now starting to look a bit more healthy. Hi James, what's your take on the euro dollar? I'm actually in some euro dollar short positions. I can show you that here. So where was I short? I think my average entry was around here, so I'm just in profit. But this is a DCA position, so I do quite a lot of dollar cost averaging on euro dollar. So yeah, I don't really have a set stop loss. It's more a case of I'm scaling into sell positions. I've stopped now because I've reached my max exposure that I'm willing to put. But yeah, essentially through all of this move to the upside, I've been scaling into short positions, almost back to break even now. But yeah, the target here is the pre-NFP price, which was around here. So I'm looking for this correction back to sort of the 1.08 level. However, overall on euro dollar, I am actually bullish. So once I get out of these short positions, I'm going to start looking to potentially get into some longs. And again, that would be off the pre-NFP price. So around here. So it'd be something along these lines, potentially a bit wider stop, maybe to something along these lines like this. How does DCA work? So DCA is dollar cost averaging, and it's not done very commonly in the retail space because it's very high risk if you aren't approaching it properly. So it's more common with investing. Investing is basically just dollar cost averaging. So if we look at, let's take the S&P. So if we do this, we could say, okay, well, we know the S&P is just heading to the upside. So in the long term, over the next 10 years, you want to start buying the S&P, for example, on an investments account. You'll buy every month. You'll buy the dips. You'll just put money in whenever you have some money. You're not really looking too much at the price action. And you're essentially just scaling in. And this is dollar cost averaging. So if the price goes against you, you add more. If it goes with you, you can add more. But yeah, that's essentially it. And the point is to scale into a full position. Well, that's my situation anyway. I'm looking to use this move to the upside to then go into the short idea I have of the the pre-NFP price, rather than adding in, for example, 5 lots here and having to suffer through 5 lots worth of drawdown. I'll split that up into 1 lot. So 1 lot over 5 lots spread over 5 positions of 1 lot each, and I'll spread it out over this move up, so then at least I'm averaged through the price, if that makes sense. Silver, yeah, I can have a look at silver in a second. Just reading the chat, give me a minute. Pound yen, and change the bias to sell. Exactly what market makers push this down a little, accumulate positions, and then push it up. I'm short pound dollar at the same level as you on euro dollar. Good stuff. Why do you think there's a correlation between the dollar yen and the US 10-year treasury bond note? Could it be anything to do with Japan holdings most US treasuries? Honestly, I need to have a look and see. I've not really looked into that aspect right now. My plan was more just based around the unwinding of carry trades. So I can get back to you on that one whenever I'm next on the stream. So yeah, let's have a look at silver. So we were short silver here. This was stopped out during retail sales, which was a bit unfortunate. However, we've added into a new short position. And this one is actually more ideal. This one is a bit more of high probability. So we've got the 618 level, or the fib level through here. We're underneath the 200 moving average, so we've got two confluences there, and this, you know, ideally will now be forming a lower high from the previous high. So that's the way I'm seeing silver at the moment. But yeah, I mean, we'll have to see. At the moment, you know, we're sat through some drawdown on this one already, so might be a bit of a messy one. The NOK SEK. Now, I was speaking about this one yesterday. Just move the camera there. So yeah, I was speaking about NOK SEK yesterday, and I was saying that I would really want to pull back somewhere here, but I don't see it really very likely. And today, that exact thing happened, and I'm really upset about this because this was a move I just didn't expect to happen, or as much as it did happen. So I didn't set a pending order. I didn't even really check. It was just one of those things. I just checked this, you know, after news, and this had happened. So it's a bit unfortunate that I missed my entry here, but it is what it is, unfortunately. I still think we could see quite a nice run on the NOK SEK actually over the coming months. So I'm looking now for a break of this trend line, potentially just a retest and then a continuation. So maybe something a bit like this. Although we may, and this is a bit more unlikely, but we may get a fill of this wick, and that would provide an entry opportunity down here, but not really banking on that. If I do see it, I'll enter, but again, not too confident in that idea. Crude oil, we can take a look at crude oil. I closed my crude oil position. So for anyone that was watching the stream, I think it was on the 13th, I took this trade live with you guys. Oops. Yeah, here. So I closed out yesterday night for, actually it wasn't there. I think it was somewhere around here. But there's a video on my YouTube channel breaking down this position if anyone's interested. However, the idea that I had on oil was a short-term sell position into a long-term buy position. So I was looking to basically see a pullback down to the 0.5 level, and that would then allow me to get into a long position off here. We've not quite come down to this level yet, but I'm not ruling it out. I'm still, you know, eyes are still on this to see if we can pull back. Actually, I'm going to set an alert here like that and see if we can get this level hit. But yeah, I'm bullish on oil for the foreseeable future. So yeah, that's essentially it really. Although the 4 hours in uptrend, we've just respected the 200 moving average here. So that's a little bit of a concern for me actually. And I guess on a shorter term note, from the, you know, the most recent low to the recent high, we've just bounced off this fib level as well. So maybe my entry down here at 0.5 is a bit too ambitious, but yeah, we'll see. Gold. There we go. Short term wise, I don't mind this. We've just bounced off the 200 moving average, but that's about it. There's not really much else in gold's favor right now. I'm still in the same standpoint. I think we can still see gold go higher, but I really want to see a pullback. I just think we're very overextended on gold, and the consolidation we're seeing at the moment doesn't really give me much faith. So if we look here, we're not making new all-time highs. We're seeing wicks to the upside. We've created this sort of resistance level that we're not breaking. You know, there's just not enough volume here to push past. We're 21% above the 200 weekly moving average, which is a lot. So I'm on the fence. It's a case of I am bullish on gold because of the market drivers, but just based on technicals, it looks like a mean reversion is needed. But you know, I'm not a mean reversion trader, so I'm not going to start trying to time that. I'm more just cautious. Yeah, I'm looking to buy a pullback as well on gold. If we can see some sort of movement down. And again, I'm not trying to time anything really, but the ideal situation for me on gold right now is a pullback down to the support level. And at least in this situation, we would then see this 200 moving average get hit or like meet price around here. That would be the only situation where I'd be interested in gold. Now, I was speaking about a break and a retest potentially, but then the same situation arises, the same problem of being very deviated from the 200, which again is a bit scary for me. So something to keep in mind. I think short term, you could probably get some nice buys in gold, but then on the, going back to just looking at the price action, I think if we look at the previous highs, every time we make a high on gold, we have a really aggressive pullback. So we made this high, we hit pull back, created a new high, we pull back, new high, we pull back, and now this wasn't a new high, but it was still, a high. So are we going to see a very similar thing again, where we've created this high and now we're pulling back? I don't know. But yeah, it's just gold's in a situation that's kind of hard to gauge it. So yeah, not too interested in trying to trade gold at the moment. Bible to work out oil. Yeah, oil is probably one of my favorite things to trade. I don't trade oil that often, but when I do, my hit rate's actually quite high. Because the price action is normally very, very clean and very easy to understand. So for example, here, all you really had to do was just look for a double top. And obviously in hindsight, that's easy to say. But, it's not necessarily the hardest thing. It lines up with the fib. So it's not too bad. We were at the 200 moving average. It was overbought. So generally speaking, oil is very easy to understand just from looking at the price action. You can get a rough idea of where we might be going. And this now looks like a new higher low. So maybe from here, we'll start heading back up to possibly back to sort of 80.5 or at least $80 a barrel in my book. Also, I updated my economic sheet this morning. So we can take a look at this one. So for the trade ideas we've got listed, now just to be, just to give a quick disclaimer, these aren't trade ideas. They're not, they are trade ideas. They're not signals. These are just ideas generated from all the information here. So take it with a pinch of salt. I'm by no means saying go out and follow all these exactly. So we've got AUD, NZD, we've got NOK SEK long, we've got Euro dollar long, Euro pound short, the Australian dollar against the US dollar long, and the US dollar NOK short. So the one that stands out to me actually is Euro pound. So I'm very on the fence with Euro pound because I was interested, then I wasn't interested, and now I'm kind of getting a little bit more interested. And the reason is because the weekly looks really, really tempting. So we've rejected this level of resistance really nicely here. The weekly candle, so the current weekly candle hasn't managed to break the previous one. It's now flipped bearish, respected the 200 moving average on the weekly, and the daily is also looking quite bearish now. So I think the entry criteria on this one would be if we can break below here. And the reason is if we can break here, this will break below the 200 daily moving average. It would break below this sort of consolidation. I mean, it's not really consolidation, but we're not really doing much here. So in my book, I'm going to class this as consolidation. It would break below that one. And then we've also got clean traffic to the left here. We've got some clean candles that we could potentially come and correct or fill. So yeah, I think technically it looks quite nice. So if we have a look at the reason behind this, we've got relative economic performance. The UK's stronger growth momentum in Q2 compared to the Eurozone, coupled with constructive medium-term forecasts for the pound. Monetary policy divergence. While the ECB is likely to remain cautious due to mixed economic signals, the Bank of England's rate cut has already been priced in, potentially leading to a correction in the euro pound. Geopolitical factors. The UK's political stability could lead to increased inward foreign direct investment, supporting GBP. Short-term target is towards 0.83. So where's 0.83? Let's see. 0.83 here. So actually very close to where my target was here. So yeah, I think actually this looks quite solid. Let's see. Let's just say we got an entry here, stop there, take profit down here. It wouldn't be unreasonable to potentially just target a 1 to 2 on euro pound. And then, you know, if we are being a bit more conservative, we could have a slightly tighter stop and a lower entry to make this a bit more of a 1 to 3. However, this is a lot more aggressive because obviously we are ignoring this high up here and the resistance. But obviously that's, you know, however you trade is however you trade. You've shorted SPY. Let's see. I can't really see a reason for shorting SPY. I suppose if you were looking for a more short-term approach, you could say that we're coming up to this previous high. RSI is overbought, but yeah, from my view, it doesn't look bearish really. Maybe in the short term, you could potentially profit from some short positions, but overall, I think we're very, very bullish. Let's see. Oh yeah, the dollar NOK is quite nice at the moment as well. So I've been speaking about this pair for wrong pair. I've been speaking about the dollar NOK for quite some time now. And I was saying that I had an entry planned up here at 11.09 roughly. However, I missed the entry. I was away, so couldn't execute. And unfortunately missed a lot of this move, but we still have this supporting trend line here that seems to be getting respected again, which is pretty nice. We also have the daily 200 moving average here that's sort of sweeping price as well. So now I'm looking for maybe a 50% pullback here. So maybe an entry to something along these lines here, and then I can start getting into this. So this would be a situation where I'd probably dollar cost average. I wouldn't just have a hard entry and hard stop loss because price could come up to around here, so around the 11.28. And, you know, if we do get that, I'm happy to just keep adding in some positions rather than getting stopped out. So it might be something potentially like this, where we layer it into 2 or 3 different positions and target around the 9.2. Well, that might be a bit aggressive. That is the weekly, potentially just a bit smaller up here. But yeah, I think there is potential here for a trade. It's just when we can get an entry. I don't know. I've been speaking about this for probably a month or 2 now, and I'm still not in. So I might be flogging a dead horse. I would like go long euro dollar, but feel cautious about it. Yeah, I think. See, euro dollar long economically makes a lot of sense to me. I think that it's not necessarily a bad choice, but similar to what I was saying about the euro pound, we're at this weekly level here. Look where price is right now, and look what happened at the current weekly candle and the previous weekly candle. This 200 moving average is swept, and we've not managed to close above. So to me, that's a pretty bearish sign, at least for the short term, which is one reason why I want to see this price come lower to get into a long position, and then we can sort of trail stops according to this level through here. And don't forget, we've had really positive news for the dollar today. So it wouldn't surprise me if we continue to see that reflected through the markets for at least the rest of the day. So yeah, just be cautious. I mean, you may be able to get a very short-term long position if you see a correction of retail sales, but yeah, we'll have to monitor that one. On the short term, what do you see DXY before we get to September FOMC meeting and interest rate decisions? Well, we've got the Jackson Hole summit in a couple of days, actually. I think it's next week, 22nd till 24th of August, from what I remember. Although I don't really see that affecting markets, because if there's signals of rate cuts, it won't, who cares, because rate cuts are already priced in. It's more a case of how much of a rate cut will we see. And I don't know if we'll get really a reflection of that. However, in my view, I think we will get something along these lines. And the reason I think this is because we've got the high here. So it wouldn't surprise me if we see this previous high get tested, and then we start getting into the period of, okay, rate cuts are coming very quickly now. Is it going to be 25? Is it going to be 50? If it is 50, I think we will continue to head down, because I think 50 is a lot less expected compared to a 25. If it is 25, I don't really see much happening, to be honest. I think we might see some sort of breakout here, and then possibly something along these lines, some sort of consolidation. Yeah, 25 basis point cut at this point won't really do too much in terms of affecting the markets. It won't be a surprise. Thank you, James. Sub to your channel. Yusuf, thank you very much. That means a lot. Thoughts on USD CAD, Euro Australian? Sure, we'll do Euro Australian, and then we'll go to the dollar CAD. Oops, hold on. That was the wrong chart. Here we go. I mean, this looks really bearish. The problem is, we were very, and I'm going to say this again, it'll probably get very irritating to hear, but we were very, very deviated from this 200 moving average. We were almost 7% above. So to see this pullback isn't necessarily a surprise. Whenever we get very far away from 200 moving average, it's very common to see some sort of pullback, whether it's a natural sort of mean reversion or whether it's driven by news. It's irrelevant. It's just quite normal to see this sort of pullback happen. Now, the daily is bullish. Actually, all three moving averages are fanned out. We're still above the 200 and the 21, but the daily the daily candle looks very bearish here. Oops, it's the wrong way. Daily candle looks really bearish. So if we could see this sort of range get broken, so you can see we're not really doing too much inside here. If we can see this get broken, this might be an opportunity to get short. And this is obviously based on technicals. I'll have a look at the fundamentals behind it in a moment. But yeah, we've got a nice sort of low down here that could potentially be a long-term target. So that's kind of the technical approach I'd take here. But yeah, I don't really see much else. So let's take a look if there's anything on here. So we need Euro, bearish USD outlook, fund managers. Might be more worth looking at the Aussie. Strong July employment data. Australia expected to perform well against other currencies. Here we go. Fed rate cuts could push the Euro Australian lower, with China's macroeconomic weakness potentially limiting AUD gains. That's kind of a separate point, actually. That would be bullish. Yeah, okay. So I don't think a short is a bad idea. It's just getting into a short might be a bit risky, because the risk to reward on this one isn't really very good. But to enter a short position here, I think is a bit too risky in my book, because you're selling into a range, and this range could very easily bounce back up and hit stops. Let's have a look at dollar CAD. So I'm bearish dollar CAD. I've been saying this for a while. So as I expect to see higher oil prices, that should in turn give CAD some strength. And with the rate cuts coming up with the dollar, I think this could be a market to go down a bit. But where to is the question. Now, I think these lows, well, especially this low down here at 1.319 is a little bit too generous, to be honest. To say this market just ranges, I'm not sure we'll get that level. Really? Yeah, not 100% certain on that one, or not convinced. However, I would be looking to go short, and the H4 is about to flip bearish. The hourly is bearish. The daily is just turned bearish on the fast-moving averages. The 200 still above price, but yeah, I'd be going in for shorts here. So the way I'd look at this is fib from high to low. This kind of meets the previous high or consolidation around here. So I'd be looking to go short something along these lines here. I think is reasonable. Yeah, so that's how I would approach the dollar CAD, given the current circumstance. So yeah, we'll monitor. We've done Euro New Zealand. We've done US oil as well. Pound yen. Yes. Oops. I didn't take this one. So pound yen is fine. I think there's not necessarily a reason that we should be concerned of pound yen heading to the downside. And the reason I say that is because I think the way I view the pound at the moment, it's pretty bullish. I think there's still some steam left within the pound, mainly driven by political stability. I think in terms of what the markets see and what investors are seeing, the pound is relatively safe at the moment, and the economy is doing okay. Now, in the long term, I really disagree, but that's besides the point. The pound actually lost a bit of strength with retail sales in the US, which is interesting. But the yen is still plummeting to the downside, actually. So I actually don't mind this position. Yeah, I would be quite happy and confident to say that the pound yen could at least see around this sort of level here. If not, pre-intervention levels back at these highs. Silver, I'm bearish on silver, but the price action just isn't providing that. Oh, actually, it's looking a bit better now. So we were short on silver. We got stopped out here in this position. The thesis that we had, the fundamentals behind silver are still fine. We were just stopped out due to retail sales. So as soon as we were stopped out, we opened a new position because, you know, the way we look at the markets in elite traders is our positions are run by fundamentals mainly. So for example, you know, if we have 5 fundamental reasons or economic reasons for taking a trade, but the price action stops us out, the trade hasn't actually changed. Nothing in the reasoning for the trade has changed. There's no reason to not re-enter unless something has changed or unless, you know, there's way too much momentum in the opposite direction. Dollar Swiss. I've actually been keeping an eye on the dollar Swiss because I'm a little bit on the fence with this one. With the yen, I am more confident to say it's bullish. Bearish, because we need. Well, I am more in the view of the yen is still in a very bad spot, or the economy is not too great, even though it looks slightly better than it did. It's, you know, compared to the dollar and compared to the the majors, it's just not. It doesn't live up to the par or to scratch. Whereas the Swiss obviously was used as a safe haven. When we saw a lot of carry trade unwinding and we saw the stock sell off, we also saw the Swiss gain some momentum. Now, normally I'd be in the mindset of we could see a correction. The issue is I'm actually quite bullish on the Swiss. And with the rate cuts coming to the US, it wouldn't be a shock to me if we do see a lower price here. Yeah, so we've got actually quite a nice level through here. So you can see this previous resistance, turn support. Now we're back at this level. The current H4 candle is looking quite bearish here. Now, obviously, this was retail sales candle, so not surprising to see a bearish candle afterwards. Prices underneath the 200 were oversold on the RSI. So I'm not going to take the trade here. But if I was, I wouldn't be upset at taking a trade similar to this. Just looking at this sort of break of this level, a retest and a continuation, at least back to sort of the low down here. But yeah, I'm not, like I said, I'm still on the fence a little bit here, so I'm not going to take it. I'm not confident enough with that analysis, really. Pound dollar. I actually took a long position on pound dollar this morning, right before retail sales. I'll be completely honest, I forgot retail sales was coming out this morning. So I took a long position. I can't remember where it was. It was somewhere here. Wrong way again. Somewhere around here, and I was stopped out by this wick, but it is what it is. I'm bullish on pound dollar overall. Now, again, just to preface, I think the pound will hit a roadblock, and I think we will see a lower price for the sterling in the coming months. So I think towards the end of the year into 2025 is when we'll start seeing the pound turn a little bit bearish, primarily against the dollar. So I'm looking for some sorts of long position. I'm not totally sure where yet, up until 1.35. So there we go. So 1.35 is my target. Stop loss. Yeah, obviously stop loss will be very dependent on where the entry is, but in an ideal world, it'd be somewhere around there. And then once we get this 135 level, that's when I'll start executing some shorts. So I guess this level through here is sort of my first selling area. But yeah, I know that the institutions are quite bullish on the pound dollar at the moment, which is where I got the 135 level from. It was in quite a lot of bank reports suggesting that we could see this market go a little bit higher before the year end. Actually, let me see if I can find this for you. It's no longer on here. Pound. Yeah, here we go. Pound dollar saw slight gains. Leveraged funds has increased GBP long positions, later decreased by 11,497 contracts. The pound yen resilient, recommendations for long pound sec positions. So yeah, overall, the larger market participants are quite bullish on the pound at the moment. So I'd be looking for long positions to follow in their footsteps. The hourly is actually just close bullish as well. I've just noticed this. Looks quite nice. We've bounced off this 200 moving average really nicely. So yeah, potentially a long position. If you were looking for more of a short-term trade, this wouldn't be necessarily a bad idea in my book. Just give me 1 second. Okay, actually, I think my time's up. I've just realized what time it is. So you've got Chris at 10. Okay, so yeah, I think my time's up, guys. As far as I know, I think I might actually be 2 minutes over. So Chris, if you're watching, I apologize. Guys, I will see you very soon. So thank you for watching. Don't leave. It's not the end of the stream. We've got another segment coming. But yeah, have a great rest of the day. I'll speak to you all very soon. See you in a bit.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hey everybody, happy Thursday. Welcome back. Just checking out a couple of things this morning. So we did have some earnings this week on Home Depot. I had some earnings that I played on Home Depot as well as Alibaba. This morning we opened up, this is today's candle. So we opened up around 362, spiked up around 365, and then it faded a little bit. It looks like HD is going to be fading pretty hard. I have an expiration out tomorrow. So unless we stabilize here, I think I'm just going to take a small loss. I mean, my max loss is $5. Which means I'll lose about $1.35, but I'm gonna get out right now around $4.25. I'm gonna go ahead and just close this one out, take the small like 60-cent loss and just get out of the trade. So just give me a minute to do some management. I'll go through lots of charts this morning: dollar, gold, silver, Bitcoin, the indexes. We came right up to my level. I had a marked call level around 550 that hit for some profit this morning, which was good. I'm watching closely. I don't think the gap's gonna fill necessarily today, but I just pulled out a quick like $50 out of that strangle trade because price didn't go anywhere for the first 20 30 minutes. That was an easy trade, 930 to 951. Grabbed a few profits there. So let me do some management here as we're watching price quickly, and here is what I'm paying attention to. So we came right up to the 550. This is a big gamble level that I saw from yesterday. If we just stay here and kind of oscillate for the day right around that 550 handle, that's fine. I have a new one that popped up here for 555, which would bring us right back into Thursday's sell-off point on August 1st. That was the day after FOMC. So we will see what the market gives us today. Like I said, I don't think the probability is going to be filling the gap today, but we might have some price action that maybe chops around. I think the bulls might struggle at this point. We've gone up over $20 on the SPY this week. So if you look at what just happened, we had 3 weeks of selling and we just had 2 weeks of ripping. Now it's not to all-time highs, it's not back to the lows, but we have had a crazy recovery. The news couldn't have come out any better today. But I want to put some real metrics behind the numbers. With inflation adjusted retail sales, we're still actually down, but that's not what people are pricing in today because we saw unemployment claims come down lower. We saw the retail sales were higher, core retail sales higher. So the market took it in stride with PPI and CPI, and everything looks pretty darn good. So anyway, I need to do some quick management here on HD. So let me close out this trade. I'm just going to take the small loss. Let's try to get 415 or less. If 420 hopefully is the max there, but 415, let's try to close it. Filled at 415. Okay, good. HD 1, 2, 3, 4. 415. Let's try it again. Awesome. Filled at 408, even better. So small loss. All right, just give me about 60 seconds to take care of these trades. Let's try 415 on this one. 404. Okay, very small loss. 1, 2, 3, 4. Is HD like ripping up or something? No, not really. Well, I'm just taking a super small loss now. Let's go 390. You're not going to fill at 390, you dirty dog. Now it's back to 412. All right. These prices are a little wide. Filled at $4. Okay, small loss there. 151. 1, 2, 3, 4. $4. Filled. All right, 2 more. And last one. 1, 2, 3, 4. Okay, so net, I took about a 30 to 35 cent loss on that credit spread. That's fine. The next one I played for earnings this week was Alibaba. If I just go in, so on my chart here, I'm going to 0 day or days to expiration. So right now on expiration PayPal, this is a 55 by 52. That's going to be a little ratio spread. That should have paid me some credit. Okay, so that's $1.64 credit in total. That'll be fine. SMCI, this one would be profit today. This is up Broken Wing Butterfly. Should have collected over $1 here, so that is nice little profit for about $210. Very nice. So I'll have a win on SMCI that expires tomorrow, but looking good. There's a 99.5% chance that it stays where it is for $400. Very nice. Pfizer, if I can get up to $29, I'm going to get it called away for over $1,000 tomorrow. Actually, no, that's out to next week, so I still have a week on Pfizer. Never mind. Let's go DTE. All right, so this 0 DTE, or 1 DTE rather, PayPal SMCI. So SMCI should be profit by tomorrow. Pfizer next week. I do have some pin prices on the RUT. So this Broken Wing Butterfly for next Friday and the Broken Wing Butterfly here for the Friday after that. I'm trying to pin this at 2050 and 2100 for a 10x return. If I get lucky on that, great. If I just keep my credits above those prices, that's about $2.50 credit. That'd be about $500 profit. So just watching that one closely. And then SPX, have some trades. Have a Broken Wing Butterfly near the highs. Yeah, I mean, I got filled on all of those near the highs. So Frank and I talked about this right now on the, let's go to the SPY. Okay. Crimson says, I like 0 DT, more predictable. I don't know if it's predictable. It's efficient. I'll say that. It is efficient. Look, it's a crash course in options. If you look at studies, I hope you understand this. The difference between a 0 DTE and 45 or 60 DTE, the amount of time that can work in your favor and the amount of credit you can collect is way more fair, and way less risk if you go out a little bit further. So tons of studies, but I mean, if you just go to Tasty Live, for example, the studies that they do every single day, they will show you with definitive and empirical evidence that all you have to do is go out like 45 to 60 days, be an option seller, you can make a lot of money. But in the 0 DT market, look, it's fast paced, it's aggressive, but you have about 10 times more risk as far as how the options prices are sensitive. So it's not a bad thing. If you're right and you win with 0 DT, great. You can make a lot of money and you can actually, net more credits through the short term, but you got to be right a lot. So anyway, I mean, I love it. I use it a lot. It's great on the it's great in the bigger picture where, things have been pretty stable. The reason we've had this big stretch, if you've been seeing the markets, like, hey, we've been, 400 trading days before we had a 2% pullback. Well, the reason a lot of that happened is because we've had 2 years of 0 DTE. And it has added, 45 to 50% more volume into the markets where now a lot of stock options that are expiring on Fridays have heavy 0 DTE trades. The SPX, the SPY, the QQQ, the NDX, like all these indexes now with 0 DTE, it adds this layer of efficiency and hedging where market makers and institutions, hedge funds, retail traders, there's lots and lots of volume happening. And so it does keep the market quite stable, which is kind of nice. Now, it doesn't mean it's perfect because there was an interesting, I listened to this podcast last night that when we saw this crash on Monday morning last week after having that Thursday, Friday sell-off, the amount of 0 DTE volume was sitting at the same lows we saw back in like 2020. It was like a holiday during I think Christmas of 2022. It was this weird thing where like we had these big blips in the market, and it was because the 0 DT volume was really, really low. So look, 0 DT is great and it's here to stay. I think it's just interesting that everyone's been talking about it. Look, it's going to break the market. It's actually helped stabilizing the market. So I don't know, just food for thought. All right. So let's do a little top down here. So we are sitting at 550. Here's the SPY at 549. I did take a call option. It's for tomorrow's expiration. Here's a 555 sitting right here. It was really cheap. I paid 47 cents for a call option. If we see that, today is not done and it's closed yesterday, open today, if this market's at all excited about getting any higher, whether it's today or tomorrow to finish off the week, I'm going to go after a little out of the money credit spread, or I'm sorry, out of the money long call, and see if I can turn, maybe a 47-cent credit into, I don't know, 80 to 90 cents, maybe a dollar. If I can turn it into a dollar by tomorrow, I'd be pretty happy with that overall. So that's a little trade that I added in. I've got some levels on my SPY. I've got some vol plays out through end of this month and September. I just showed you those, the expirations I have for tomorrow. So SMCI should be a good profit for everybody. That should be looking favorable for everyone. If I take all the accounts out here, go to SMCI, where are we at? Let's go symbol. So SMCI is up about $2,800. That's going to be expiring tomorrow. SLV is up around 30 grand. That's good. MO is still doing pretty well. We're up to 5068. MO's up $74,000. So there's some big winners out here. WBA, that's a drawdown I'm in with Walgreens, but that's a dividend stock. Yum Brand's hanging in there. Under Armour, I've got some nice profits running on Under Armour. I own that thing around like $5. With options, I've lowered the cost base even more. That's probably the closest stock I have to owning at zero. I added a lot of options over the last couple of years. Selling covered calls, adding credit spreads, generating some income, lowering the cost basis. I think my cost basis on Under Armour is like under $4 right now. So I'm just going to hang on to it. I like Under Armour to the upside if we get into this mid range. So we've had a nice little push post earnings. We have a range. Let's go back to the daily time frame here. Let's see. I like this like $10 to $11 zone. There's a big gap fill here around 11 or 12 bucks on Under Armour. I'm not looking at some massive profit potential other than getting back to maybe $10, $11. And then with this break even, like I said, I can look back at my history. I've used a lot of call options to lower my cost basis down when we hit the same low. Lots of credit spreads in here that generated some income over the last couple of years since we had our low back in 2020. I bought the shares back down here, equal lows around $6 and change, and then just use some options to let them go. So anyway, my price target's like $10 to $11. I'll let it go for there. All right, so let's go SPX. I'm going to try to keep the charts really clean. I know that they are getting messier, but this is probably the simplest chart I can give you. Okay, what you're looking at right here, the shaded zones are the weekly candles. So this is a green week from last week, a green week thus far for this week, and we're still hanging out at 550 today on the SPY. Look, this is last Thursday's sell-off. Okay, so we had FOMC with a gap higher, and price was up on the day with FOMC, even through the press conference with Powell. Thursday, the market unwound. Friday, the market gapped lower, and we had the SOM rule triggered. And then Monday was our crazy sell-off and open, and it was an immediate buying opportunity. Now, all this being said, if you're looking at the VIX right now, the VIX is down to like freaking 15. We went from 65 to 15, just a crazy vol crush in the market. I mean, the IV on the indexes was up to like 150 on my IV ranking, and now they're down to 19. So we've seen this huge swell in IV that just went back to right where it started. So as a option seller, that is what you want to see. Okay. As we're looking at prices now, okay, I do think with the gap today that this gap is potentially vulnerable. I think this gap is vulnerable. I don't know if the market's going to come back and test all-time highs, but I will say that if we can, I'll say this. How many of you out there just give me like can we do a poll in here, by the way? Can I actually put a poll in this chat? I was going to ask how many of you are more bullish or bearish, or let me pose this question. Just type it in. Type in top if you think this market is going to retest the top first, or type in bottom if you think this market is going to retest the bottom. What do you think is more probable right now? I'm just curious on, public sentiment out there. What are traders looking at? We've obviously had a great recovery, but we're still from this high to low swing. We're pulling back right around that 50 to 60% window. So there's still some more legs to the upside that the bulls are going to have to, pull up the pants a little bit and figure out if they can keep grinding higher and take out that Thursday sell-off. Okay, I see top. Okay, I see a bottom. All right. And as I expected, this is what makes a market, right? We don't have, full on 100% consensus. And if we did, I'd be a contrarian. So if everyone's saying top, then that means I'm probably going to short it. So I'm using this as an instrument to what I want to do moving forward. I'm just kidding. But no, in all seriousness, so top or bottom, look, it's tough. We're kind of right in this with this window of like the market can just keep going up, I think it's pretty fair to say that the market is now shrugging off what we saw last week. Like very easily shrugging off what we saw last week, because Thursday, Friday, Monday, the 5th, shrugged it right off with, last week rallied, this week rallied, and here we are coming right back to where it all started. So it doesn't mean that we're done, but I will say that if you are going to be a seller, if you're going to be a full-on seller in this market and think that we're going to come back and retest the low, there's no reason to be a seller right now unless we break below 535 or 530. The bears are going to have to break through that level if we're going to have a decent look to retest the lows. Otherwise, we might just go sideways for a little bit. I don't think that the trajectory we're on, and as aggressively we've come back, we're missing some catalysts over the next couple weeks, because all we have now is Jackson Hole, right? So let me make a list here through the end of August. I did this with my traders this morning. So we have a remainder of August, okay, and then we'll go into September. And I'm going to do this from memory, but I might consult the FX calendar if I have to. So the remainder of August. So earnings season is done. So Q2 earnings wrap up. We're like way light on the calendar. We've gone through Mag 7, which is really kind of all that matters. But Mag 7 didn't save the market. It didn't save the market like it did back in May. This time it was just better employment data and better CPI, better PPI. So earnings wrap up. It's kind of done. We just did, PPI, CPI, and we had core retail sales. And we had retail sales this week. Okay. Before we get to the end of the month, we do have Jackson Hole. This is August 22nd to the 24th, which is going to be a Thursday through Saturday. So that potentially leaves some headlines to be read on Thursday and Friday. We also have core PCE end of month. Okay. So before we are done with August, we still have a couple of talking points here. Earnings is pretty much wrapped up. We still have Jackson Hole, which Jackson Hole might be addressing, tensions in the Middle East. It might be addressing other things. I don't know if it's going to be about inflation or monetary policy. You never know. But Jackson Hole is notoriously volatile because it is still a thin market. Like August is typically a lower volume month, and so Jackson Hole can be pretty disruptive when it comes to some intraday price action for a couple of days. Last year. One more thing before the end of the month, we also have Nvidia earnings. So I guess we technically still have a Mag 7 left. This is going to be August 28th. So before the end of the month, I would say this: all these things need to be good for this market. For all you that said tops, all these things need to be good. Okay. Meaning Jackson Hole needs to be optimistic, meaning that core PCE needs to be lower than expected and having a better print so it comes in line with the PPI, CPI, so it's better inflation data. And then Nvidia earnings needs to pop. And Nvidia earnings have been like priced to perfection and probably still are priced to perfection. And we will see. Is Nvidia enough to like give this market that extra boost that it needs with everything else being optimized? So all this has to go well for, I think, the top to be reached. Even if we have the top, yeah, you're right. Wednesday before Jackson Hole, you are correct. It's minutes, so it's not the same as like a Fed, rate decision and press conference. But you are correct. We do have FOMC minutes, and that's next week, right? Yeah, that's next week, Wednesday. So I think all these things have to go really, really well. If they don't, well, we have some gaps to fill. We have some bearishness that could be kicking in here. We could have a bit of an unraveling, unwinding, just a reality check. That's essentially what this was. This fall was a reality check, and I think that it could happen again. Do I expect it to be the same type of vol that we had, in 3 days? Probably not. But that's why I'm saying on this chart, if we break below this 530 level, okay, 535 to 530, we break this trend line. To me, this is a lot easier to justify being short, trying to get back to the same lows. Okay. If we go lower, then we still have a high-low swing, lower high to lower low. Maybe it is slightly lower. But think about the sentiment swings this market would experience if we go from high to low, 10% correction. We pull back 7+% of that correction, and then somehow we end up at lower lows. You know how much damage that's going to do to the bulls? That's going to make this high seem like it's going to be the Sisyphus test. Is that the Greek tragedy where the guy just pushes a rock up the mountain forever? That's for eternity. I just think the all-time highs are going to be farther and farther away if we take out these lows. Right. All right. So we get to the end of this month. These all have to be keeping optimism there, looking pretty good. NVIDIA's kind of price perfection. Core PC has to come in solid. We go to September. Okay. September, we have this is all prior to the FOMC rate decision on the 18th. We have non farm, which will come in with jobs numbers, right? Jobs numbers. Then we're going to have average earnings, and we're going to have unemployment rate. So that's all through non-farm. We are going to see another round of CPI and PPI, which they switched at this time. So in September, it's going to be a Tuesday PPI, or I'm sorry, it's like a Tuesday or Wednesday CPI, and then the next day is PPI. So for whatever reason, it switched around. But we have more inflation data in September, and then I think we have GDP for the U.S. as well. We'll have retail sales. I'm pretty sure we'll also have unemployment claims. Every Thursday we have unemployment claims, and then we'll have the FOMC on September 18th. Okay. So this is actually a decent amount of data that the market will be digesting until we officially have the Fed rate decision. Now, if you watch the CME Watch tool, this Fed Watch tool, the probability is getting higher and higher that the Fed is only going to be cutting 25 basis points. Again, another thing that changed wildly over the last couple of weeks. Where's the emergency rate cut? Where's the Fed's going to step in? They should be cutting 75 basis points. Oh my gosh, we're going to be in recession. Now, just seems pretty calm out there. Fed's doing what they said. They'll cut 25 basis points. It'll be a test cut. Now, if we cut 25, 25, 25, that puts us at 75 bips or 0.75% by the end of the year. And then if we cut 1, 2, 3, 4, 5, 6 times going into 2025, that total, okay, if this is all 25 basis points each, that total is going to be 2.25%. And if we're currently sitting at 5.25, 5.5, that brings us down to 3 to 3.25. Okay. Now, interesting that we'd stay here. If we still see inflation at 2.9% and our Fed restrictive rate is at 3%, you can see that the Fed still wants to see inflation data improving, right? I think that all this cut could definitely pause and hesitate if we see an uptick in inflation of, let's say, year over year gets back to 3.4, gets back to 3.5. The Fed is not going to be cutting. I don't think the Fed would be cutting to then see their rates getting underneath or lower than the actual year over year CPI print. So this is all, 12 to 16 months away. But as the Fed's cutting, they are expecting to see there's still a slowdown out there. There's still some some bubbles under the hood. So again, all this is being digested, but you can clearly see there's been a big sentiment shift the last couple of weeks. Full on panic to recession scares to now, okay, the Fed's going to cut 25 basis points, off we go. But like I say back in the chart here, I think all these things have to go pretty darn well for us to be hitting the top. Okay. In fact, I would even say this. If we do hit the top, okay, if we do hit the top, doesn't mean I want to sell it, but I would be more interested in a failure at that top, looking for this to maybe be a range. One thing we haven't had in 5 years is a range. Okay. In fact, it's been longer than that. The last time we had a sideways move in the market, it was 2015 and 16. And then late 2016 and 17, we started to break. 2017 was an eerily bullish year. 2017 to 18, we had a vol event. 2018 to 19, we got back to the highs. 2018, we crashed again. 2019, we recovered. 2019 into 2020, we crashed again. That's where we have this big broadening pattern. Like, it's been crazy since 2018. Once we had that vol event in 2018, this market has been a series of booms and busts. And the last time we've had a range, it was 2015 and 16. So we're almost a decade away from having some type of range. So could I see a 10% range on the S&P? Sure. So do we find a way to get up here? Yeah, maybe. But then from there, is it easy to, sell off and sell off? And it's never easy. But if we carve out a top, I'd like to see it hold. So the trades that I put in. So Frank, if you're watching, I did get filled on my broke wing butterfly here. I got filled for $1.50 out of a $5 butterfly. So I don't have a ton of risk on the trade, but I'm looking for a profit trap. I think I did this out to the end of the month. Let me check on that. It was an SPX butterfly. Let me check here. SPX, August 23rd. Let me check the highs. You know what? I got filled on this broken wing. that broken wing at the highs. I also put one up here that I can take a look at today. Let me check those. So August 23rd. Let me just check one account to simplify this. There we go. So I've got a broken wing on the 23rd with a pin price of 55.65, which is the Thursday sell-off. And then I have a September one at the all-time highs. The September one was filled for $1.50. So I do have some credit on these. They're all, it's a 10-point wide. So, I mean, I've got some risk, but with the credits collected, I've got about a $3.50 risk. So it's defined. It's fine. I do have a profit trap that would pay about 10x. If I'm right at expiration, that'd be pinning the price. That's super lucky. But it's there. And if not, and price actually rejects off these levels, then I'll just make the credit as is with the tail credit at $1.50 each. So anyway, all right, back to my thoughts. Does this make sense? Okay. So for those you saying top, those you saying bottom, look, both of you could be right. I don't know which is going to get tested. I truly don't. But I will say that right now, if this market just shrugs off what just happened the last couple of weeks, I think everything else that comes in has to be pretty darn perfect for this market optimism to continue the way that it's been continuing the last 2 weeks. I really do. And if we do get back to the tops, I am a little skeptical of this market blowing through these highs and going much, much, much higher. Okay. So just giving you some updates on where we're at. We still have some news to get through by the end of the month. If it's not perfect, I think this market's going to finally show a little bit of a downward movement that we haven't seen since Monday of last week, right? We opened at the low and we've been ripping every day since. So we do have some news to get through for the rest of this month. We kick off September. We have a decent amount to get through as well. That's all pretty critical news. Non-farm, you can see the market's sensitive to job numbers right now. CPI, PPI, like we saw this week, came in better than expected. GDP for the U.S., retail sales for the U.S., unemployment claims as steady, Thursday prints, and then we get into the FOMC with the old rate decision that has been highly, highly, highly anticipated and all over the place, right? This was supposed to happen back in March of 2024. Now it's September, right? So what a crazy difference. And like I said, the reality is the Fed said they're going to cut probably 2 to 3 times this year. And if they cut September, November, December, there's your 2 to 3 cuts. 2025 is going to be the interesting one of how much more consistent they are with cutting every month or cutting every meeting or cutting every quarter. So it will be something we have to keep an eye on. But I do think that it's going to be challenging. If we get to the top, I think it's going to be challenging to blow through that top. Just my thoughts. Okay. All right. So I'll wrap it up on that note. For the new stuff, let's talk charts. If you are a buyer, then this has been a great couple of weeks for you. And there's really nothing else to be said. If you've been buying, you had the dry powder here to buy. We had some opportunity to get through this awful crash we saw and that vol event, but it's been pretty steady ever since. And today, 550 was hit. That was my target. I've got a 555. If we have another big stretch tomorrow, we're coming right back into these highs. We'll see what happens. So I'll keep an eye on that one for the rest of the day and tomorrow. The bears, like I said, to really have bearish confirmation. I'm not sure what these lines are for, but I'm going to take those out. For me, the bears would have to take out 530. So I'm going to put a chart line right here. If the bears take out this 530 level, I'll make this red. Okay, if the bears take out that low, and I'll probably watch the trend line, but right there to me that's where the structure is. I think that's where there's going to be more of like the waterfall effect of like more piling on for shorts and covering losses and buying shares and getting out of puts and things like that. But until then, we have trend line support right now, and the bulls are way ahead of the game. All right. But we do have a couple of gap fills that make me a little concerned if we're struggling at the same high that we sold off from on Thursday. All right, that's the SPY. Qs, same type of thing. Okay, so take a look at this. There's the trend line that would have to break. The bears would have to take out 448. So put in another line here. If the bears take out 440, it's almost 449, but I'll put it right below that level. If the bears take out that level, we have our Thursday sell-off that's right within reach, within a couple of points here. 475 is that Thursday top from post FOMC. And the highs are a little bit farther away, right? The SPY is come back because we only had a 10% dip. The Qs have rallied a decent amount, but this was a 20% drop. So we're not even, we're right around the halfway point of the Qs. So there's still a lot more upside to be had here. And I'm not saying that we can't get there, but I could see some hesitation. All right. NDX, same thing. We got some gaps to fill. There's my trend line. SPX, same thing. Gaps to fill. There's a trend line. So I'm just going to keep an eye on this, try to keep the charts very, very clean. The Dow looking a little bit better. This one is probably more the more resilient of the indexes. The Russell, trading up today with a big gap at 211. It's nice to see there's a bit of a broadening here where we've come in off those lows. My RTY positions, my RUT positions looking good. So I've got some broken wings in here that I needed to stay above 21 or 2050. Those should be looking much better right now. If I go to the charts here, let me go to RUT. So I've got this is a broken wing for next Friday. And then this is a broken wing for the end of the month. So watching those to see if we can stay above 2050 or 2100. I will be watching to see if I can get a lucky on a pin price as well. I'd love to see prices kind of hanging out in these gap levels. Also with tomorrow's expiration, it's a Friday expiration. It's a monthly expiration, so we may see some pin prices here. Frank, what's up, dude?
Hey, Chris. I'm doing good. How are you?
Good,
How
man.
are your trades?
Trades are good. Trades are fine. How's you did a 450 by 457. Did you take, you got to be taking full profit on that now or close to it, right?
I am. I'm pretty close. I'm at 80%.
Nice.
I'm monitoring it, but I think I might ride it out, try to close out tomorrow for at least 95 or something.
Okay.
Because it's at 457. We gapped up this morning, opened at 468. So we'd have a lot of ground to cover if the price wanted to come down and cause me to stop out or something. But
right. So because you'd have to drop all the way to 457, correct?
Right, which I don't think is going to happen on what numbers have come out this week.
Sure. It'd be pretty stable. It'd be pretty stable. And tomorrow too, I think there's a reason that this market might be gunning for this same level because that's when all the drama happened. All the drama happened last that August 1st Thursday when the market dumped after FOMC. That was really where all the market started to kind of lose its traction. Right? Thursday was nasty. Friday was the SOM rule. Monday was the open. Like, we're never going to. I certainly won't forget it. But I could see the market coming back to that level and saying, okay, now. Are the bulls able to keep going, or are the bears going to have their reckoning? But for you to be at 457, we'd have to dump over 3% in a day because your expiration is tomorrow, correct?
That's right. Yeah, I don't think that's necessarily going to happen. We don't have any more news this week.
Agreed.
I think if anything, we just kind of stay where we're at. Although, I mean, today we're up almost 2% again. I just think
I know, man. The gaps are almost 1%, dude.
Unemployment claims have been just very sensitive, I guess. So,
yeah, I mean, the market's taking whatever it can get. That's pretty much what I determined. It's like I posted in my Discord this morning. Market's going to ask for better news. Retail sales came in, 1% versus 0.4. Core retail sales 0.4 versus 0.1. Unemployment claims again 227 versus 236. The futures market. If you look at ES this morning, this thing jumped right on the news. Currency strength right out of the gate. As soon as the news came out, JPY sinks, the Swiss sinks, Aussie's up. The dollar had an interesting pop this morning, which I thought was something to consider. I still on my dollar news. What is this gap on the day? So we gapped up 1.27% on the Qs. We gapped up nearly 1% on the S&P. Just crazy, man. Like this market loves itself. It's amazing. It really is like. Forget about it. Never happened. What vol event,
If it wants to go back up to the highs, and so be it. I am
sure.
At this point, now that all the news is out of the way, I don't think I'm going to buy another out of the money put for tomorrow. I've so this trade would be about $300 something, and I've spent I want to say like $20, $30, or $40 on these out of the money puts in total.
Nice.
So I think I'm going to be done and then just take the gains that I have already.
Sure. Yeah.
But after today, I don't see any real reason why we should come back lower tomorrow. So probably just going to, stay out of the puts for now.
Yeah.
And maybe look next week. We have something. I know it was something big. We have PMI, I think. Next week is PMI. That's big. FOMC meeting minutes.
Jackson Hole next week too. That's the big one I'm looking at for next week.
Or Jackson Hole on Friday.
Thursday, Friday. PMI for Eurozone and US, right? Yep. And then Jackson Hole starts Thursday. So, CPI's out of the CAD. So most of we have meeting minutes on Wednesday, Jackson Hole Thursday, Friday, PMI on Thursday as well. So it's kind of a backloaded week from like Wednesday meeting minutes to Thursday, Friday, Jackson Hole, which Jackson Hole is very difficult to trade. It's a weird like price action day. But the nice thing this time for Jackson Hole is NVIDIA earnings aren't at the same time. Last year at Jackson Hole was a freaking mess. Let me try to find it. Let me see if I can look at a date here. I just want to go back as a reference. If I go to NVIDIA, actually, let's go Jackson Hole 2023 dates. I want to find out what it was like. It was a wild 2 days, man. Summer, fall 2023. That can't be right. Jackson Hole Symposium. So was that it? August 24th. Okay, so that would have been
on that day though. Was it just extremely volatile?
Dude, it was like, I mean, it was huge moves that ended up going nowhere. It was just, and we had NVIDIA earnings on top of that. So we had like this, we had one of the biggest post-market gaps in an index. It was like a 2.5 to 3% gap higher post-market because of NVIDIA, and it came just crashing back down the next day. So it was just like a weird, like it crashed lower, ripped higher, crashed higher, ripped lower, and all this happened within a couple of days. And I was like, what the heck, man? But August is also like this, summer month. It's still like kind of vacation-y, a little light on volume. So if this is correct, August 24th to the 26th of last year, I just want to go to the SPY really quickly and go back to that date. So let's go 2023 in August. August 2023. It's probably going to look like, what are you even talking about, drama? It's probably right in here. So 14th. All right, let's zoom in. It's going to be right in here. Let's go to the daily.
Yeah.
And it's like it maybe it's in my head was way more dramatic than it really was. But here's 2022. Here's 2023. All right, so the 24th. So August 24th. Here it is. Okay, so this was it. Here's your 23rd. So the market, finds a low. 23rd, rips up here. This was Jackson Hole. So we go from a gap higher, and again, I look at this and it's like it doesn't really show the true story from what I experienced last year. But we were up about 0.5% gap up, which was way higher. Like we opened. Post market was like a 2% gap, and then we just ripped to the downside. This candle from high to low on just a daily candle was a 1.87% drop to the downside, which at that time was pretty meaningful because we were going in this kind of low volatility world. And then we had this, just ugly indecision candle. I don't know. I guess I'm making a bigger deal out of it, but I can tell you that around this earnings print with NVIDIA at the same time as Jackson Hole, it was a lot more volatility that seemed unnecessary at the time. When the dust settled, it is what it is. But we were still in that kind of weird summer correction where August didn't really save the market. We still had a downturn in September. And on that note, I mean, that's why I asked earlier this morning, Frank, how many people think we're going to retest the high? And look, we still have 2 of the worst months moving forward, right? If you go to our seasonality for Edgefinder, September, October are 2 of the worst months in the markets. So if we go to S&P, so right now, August is essentially flat. September, October are 2 of the worst performing months. And I would be shocked to see a positive September coming out of this month that just kind of saved itself. Like August in 3 days of trading, we had August 1st was Thursday, which was a terrible day. August 2nd was Friday, which was non-farm. That was a terrible day. August 5th was Monday, which was the crash. August was in a huge hole just because of those 3 trading days, and we've just essentially washed it away. Over the last 2 weeks of trading now, we've washed away that nasty spill. but we still have 2 rough months to get out of this, funk. So,
I mean, I
question.
would say in the next 30 days,
Uh-huh.
if the market isn't at the highs, then I don't know. Because then we'll be in the middle of September. That's usually when I would say mid-September to early October is when the worst of it happens. Because usually you get that rally towards the end of October, and then November ends up being a great month.
Right.
So I'm thinking, I guess in a month's time from now, we're at August 15th. So we got 30 days of can we get back to the highs? If we do, I would feel comfortable taking a short. I would probably still play cautiously bullish,
Mhm.
but from now until then, I think there isn't much to tell us that okay, we need to look for downside. I think
Yeah.
we have a little bit of time to keep going higher.
My downside would be here, dude. We either have a move back down into obvious down confirmation, or we get back to these highs, and I just don't really believe that. And look, I'm not going to short the market on freaking margin. I'm just going to take option trades and try to take some bear call spreads and make a few
Yeah.
bucks. So it's not like I'm not betting the farm. I'm just saying that right now the bears are absent. The bulls have been in control since this low, and I think a lot of things have to be priced to perfection for good to happen for this market to justify getting to the highs when we're coming into the worst time of the year. Usually August, September, mid-October are when the corrections happen in the stock market. What I think everyone should be hopeful for is that by the time we get through the worst part of the month, typically, is that we're not down to fresh lows. If we're down to fresh lows coming out of October, dude, I'm sorry, man, but all-time highs are going to be further and further and further away that don't look likely by the end of the year or even into Q1 of next year. Right?
Right.
So, I mean, I think if traders are lucky, I think we try to sniff out these all-time highs, and then we have some reality where it just doesn't really go higher, and then the market comes back down, and we have a range. I mean, that would be kind of nice. I mean, it's very tradable. If we're at highs, we can trade it. If we're at lows, we can trade it, and then just pick and choose your battles in between. So, again, I don't know. I don't have a crystal ball, but I do think that it's going to be interesting as always. But
Well, we're
this
also
this week has been silly bullish, just like last week. So, what are you gonna say?
yeah.
Sorry.
I mean, I don't necessarily think it has to be perfectly aligned for a bullish market. I think you get any kind of news. You can have everything stacked against the market in the bearish sense, and then you can have a nice unemployment claims or something, and then everyone brings it back up.
Yep.
But right now on the NAS, so we're approaching a major resistance level.
Show
It
me.
served as a double bottom from June to July, and then it served as a top at the beginning of August. We're now
Yes.
approaching it. It's also coupled with the 50-day. So I think this might be more so the decision point than this
Yep.
wedge, because we broke out of the wedge. We're looking good. There's a clear breakout, good bullish trade here, but I think this might be more of a. This could be like the gate. If we can get through the gate, I think we come back and try to test the highs. But if we don't, if we
Yep.
pull back again, create a double top, and then we just have this, I guess, this area of limbo between the 50 and the 200, which is like 1,000 points or something.
Yeah.
Close to 1,000 points of just range bound markets.
Yep. And that point that you made right there, that's exactly that Thursday sell-off. So that's what I pointed out earlier. I think that is a spot where it's like the market's going to have to make a decision whether or not it can grind through that. We're certainly making a quick run to it, but if we don't close beyond that, I mean, I'm looking at the Qs, you're looking at the NAS, but it's the same thing. That Thursday sell-off top, it's, I mean, I'll move my there. So it's right there. Like we're creeping up to it, but yeah, you're spot on, dude. I think that looks really clean as far as if we struggle there, it doesn't necessarily mean that we go bearish, but it's like if we struggle there and we go limbo, I mean, this could be what sets up for a bigger break. I mean, like I said, I don't want to be crazy bearish and actually taking intentional positions unless the market confirms that we're going lower, because we could do this and we could go sideways and we could just be seeing nothing, so
Yeah, even
I
on a
think-
break too. Sometimes like we
Yeah.
can break lower and end up making a higher high the next day. So
Well,
it's hard to tell.
I've already kind of hedged myself out to like the end of September, where it's like I put probably 5 trades on at 1/4% each. So I'm about 1 to 1.25% hedge right now in my positions. Now that percent that I'm willing to sacrifice, if they never work out, they never pay me, I'll sacrifice 1 to 1.25%, no big deal. But this is probably about 10% of gains if I get paid on any of them.
Right.
So it's there, but I think what was frustrating me this week is I was really defensive coming into this move, and I had some recoveries. I've had some big P&L swings, back in my favor, which is totally fine. But I did play some more defense, and I think what was annoying this week is I just feel like I just wasted money. I just I just feel like I just put on hedges, and I'm like, this stupid market's not going to do anything. But I have to remember that I have expirations out to the end of this month. I have expirations out to the end of September, and so it's not like I'm not looking for instant gratification here. It's like just in case, and that ultimately is what hedging is. It's just in case. I have insurance now. I have a backup plan just in case.
I would not think you're wasting money in this situation because of what we just saw.
Exactly.
I wouldn't be hedging all the time, but it's just
Right.
in this particular market, I didn't expect us to come this far back. But I'm not surprised. So, this is just inviting bigger swings.
Mm-hmm.
And I think if we do get sell-offs, they're going to be very quick, like one day, 2 or 3%. So your out of the money hedges could really pay off, but you'd have to act quickly. Otherwise, we're just likely going to drift higher like this.
Sure.
So
yeah, very true.
I think hedges are important, but at this point in the week, I don't really see taking any more as a good idea.
I'm good, man. I was good. Like I said, 1/4% hedges. I'm good with that. I put on 4 to 5. And there's no reason for me to be with 10x payouts. There's no reason for me to hedge more than like 1%. It's like
Right.
I'll sacrifice that. And usually I should just do like 1/4% and be good. But because it was a little bit of a, an oh crap moment, it's like, well, I need to make sure that if this were to be another vol event where, the VIX, for example, going from, that's the wrong chart here. Let's go back to the SPY. The VIX going from, freaking 65 down to 14, dude. Like we're right back lower than where all this drama started in July. This is crazy to me that this market has even sniffed out like, oh, just a little bit more volatility. Nope. It's crushing. Like this vol crush has been one of the most impressive drops I've ever seen. I looked at term structure this morning as well. And now they're looking for slightly higher volatility. Look at this. This is the actual market on term structure looking for higher volatility out the next 30 to 60 days. So we're down to, 14 and change right now, 1481. And this is talking about, through September, October, getting to 16, 17, having some elevated volatility, which I think is interesting. Like it completely flipped, dude. It's wild.
Yeah, it did. I would just wait for that low again, maybe under $11 a share before you look at taking another short or like buying the VIX or something.
That's true.
After that dump, after that 180% spike on the VIX, I bought SVIX, which is the short ETF of it. Just because
you bought SVIX, okay. SVI, is it VIX?
SVIX, yeah. So in the short term,
yep.
If the VIX did come crumbling down, this is gonna make its way all the way back up. So at the bottom here, it's like 18 something dollars a share.
Yep.
If it comes back up to the highs, which would be like if the S&P or the NAS make it back up to the highs, that's 175% gain.
Wow.
So I feel like this could be a good short-term play, as in like in the next few months.
Yeah.
As I could make 175% on our way back to the highs versus I think it was like a 12% rise on the S&P or something.
For sure, man.
So
did you actually catch it? Did you buy this?
I got it at 23.
That's awesome.
Let me make sure of that though. I got 23.19.
Okay, dude, that's so good. That I was so you played the SVIX. I did the SPX500. I bought this at 40, but I didn't get it in everybody's account, and I just did a bunch of puts. So if I do take any assignment on this, I've got puts in the 50s and a put in the 35s. If I take any ownership, I'll own this thing at like $48. And I was doing the same thing. It's like own it at 48. I bought one at 40, and I'm trying to get back to the highs. Or even if it's this, even if it gets back to like 56, that's a quick flipperoo for a nice gain that's outperforming, like you said, that recovery in these instruments. It's a bigger gain than what you'd have actually like buying the index. Being 100% invested in the index returns, a tenth of what you get on these like short-term volatility plays.
Yeah.
So good stuff,
The
man.
only issue is that you get another day, like what was it, August 2nd or something.
Yep. The 5th was Monday.
I mean, this could come down back below 20. It could go into the teens. So
For sure.
it's not a safe bet, but it could really pay out in like the next few weeks or the next month or two or whatever.
Yep.
As long as the VIX keeps falling. But I think once the VIX makes another low, which is what I've been looking at, even July 19th, that was like the indicator. We saw here, I need to zoom in. We saw this massive sell-off only to come back up again. I think that was the indicator that the VIX is not going anywhere. And so that was a good spike we saw in the VIX.
Mhm.
And then we see this drift lower. If we go back down to 11 or 10, I would say under $11 is when I would probably look to either get out of SVIX or start buying the VIX again.
For sure.
But yeah, that's basically what I'm doing now, is just cautiously bullish, maybe picking up some volatility trades here and there, but I'm leveraging a lot less now. So I feel like I'm thinking clearer.
Mm-hmm.
But yeah, this week has been good.
Good, man. When we left off yesterday, what were we in do you remember what we were talking about yesterday? You and I talked about some broken wings. I did get filled on the.
Oh yeah, on NDX.
So I got filled on the SPX as well as the NDX. So I've got broken wings here. So this one, as well as this one.
Is this one day or is this?
No. I did these out I think I did this out to the 23rd and out to the 30th.
Okay.
So I'm trying to give myself a little bit of time on those, and I think on the NDX same thing. So it's right here on NDX. Actually, no, NDX I didn't do the highs, but SPX I did, and then the NDX I did the high. So I have a 24.25. That's 20,425. That's my pin price. This one I think is out to the end of August or September. Let me confirm that. So let's go NDX here. I have an August. Did not get filled. Filled. There we go. Okay. So, son of a gun. So I got an August 23rd, 19.5, which is okay. So this one's pending, Frank, at 750. We're trading at this one might get filled, dude. This is out to next Friday. I told you yesterday I'm trying to take a third of the width, and so since it's $25 wide, I'm trying to get a third of that filled at 750. I'm still leaving it there pending order, and then I have the one at the top at this is NDX 21,000, which would be just up a little bit higher than the all-time highs. I'm trying to get that one filled at 5. It's trading at 465. So if we go any higher, I see the mid price at 480, 485. If this gets filled, then I will have that top broken wing as well as the intermediate one broken wing, but I'm trying to get a third of the width. So, that way the defined risk even on a broken wing butterfly is good. So I'm that way. Can
you look out to 0 DTE real quick?
Yeah, for sure.
On NDX.
So look at today.
Yeah.
Okay.
Look at 19,540.
Okay. So we'll go call butterfly 19,540.
That should be the sell leg.
Okay, 19,540, and then just do a typical skip strike. 45 cents. So it's $10. It's a 10 by 20. So you have a $10 bear. It'd be a bull call spread for $10, and then you have the it'd be a bear call spread for $20. So your risk. This is where the NDX is a little worse off than the SPX sometimes, is just the strikes are slightly wider. So you're making 45 cents or 50 cents. You got a profit trap of $1,000, which pays for your max loss, but your max loss will still be risking about $9.50. That's the downside. So if we were to go, how far do we have to go to get to 19,540 from current price? 19,540, not that far.
I say that because that was the high.
Yeah, we'd have to
Thursday.
Only like 0.8% to go higher. Yeah.
but it is just for the end of the day. So
Well, how
we're
about this
hitting
though?
this.
How about this? Put it again. I don't mind this trade. If I did this for tomorrow, I'm going to take this trade. Again, you're talking. No, I'm just kidding. I like the trade, but I would say if it's $10 wide, if I can get $2.50 for this trade, how do I get that? Well, we're gonna have to see price go a lot higher in order for this premium to get up there. So if I put 250 in here, I'm likely not going to get filled. But if this position is threatened in any way, Frank, like I would be pissed if I took a 45 or 50 cent credit and had this thing actually offer me $2 to $3, right?
So price will have to go past this spot, right, in order to be 250.
No, it shouldn't. I mean, because right now we're at 380. We'd have to go 160. I mean, if we went up like maybe 100 points or so, we could be close. So if we're at 380, we go to 480. That's the end of the extended move. Let's see what 100 points out looks like. Let me move this strike up a little bit. So let's go to 480 and sell like 100 points out. So you get 220, 225 if you're 100 points out. So, I mean, if I move it down to the 540, so that's the pin price, 540, I'm going to take a number like 550 just to be a little bit safer, and I'm going to put in a trade here for $2. I'll take the trade. Okay, so I'm going to try to get $2. If it fills, great. This is a trade that's going to be done tomorrow. So if it doesn't fill, no big deal. It's done and over with, and I don't get filled on it. But I'm going to take the trade, dude. So I'll give it a chance. See if we kind of like pause for the week and not necessarily go higher. So let me throw this in here. $2. Let me get this in everybody's account. 9732. All right. So just give me 60 seconds to get these in. Oh yeah, I'm gonna take it, but I'm going after $2 instead of the 50 cents that it's filling for now.
So it would have to just basically be on the money then.
Pretty much. I basically I'm taking the trade like to get pinned and filled kind of at the same time. So that's the goal, I guess. And it's probably a low probability trade.
Why not for today?
What's that? Why not for today?
Yeah.
Oh wait. This is for no, the wrong one. Sorry. I don't want to do it for today. I want to do it for tomorrow. Right?
I don't know. I was saying
gonna do it. There's no way this is gonna be filled today, dude. There's no way. This is a well, I guess this is 7. I don't know. I don't think we're at the gap today. I don't think we're going up. What would be the percent move if we're gonna? There's no way. I would take the trade for tomorrow.
When was last Thursday?
Hang on, I'm gonna cancel this order.
So last Thursday we went up 4% again. Not saying that's gonna happen this time, but
yeah,
we're at like 1.8%. So I mean, we could definitely go another 1.8% on the day.
I know we could. This market can do whatever it wants, dude. I'm just trying to make some trades. Let's see. This one is not filled. Okay, so let me check out tomorrow's expiration. So today, I just don't think it's going to take. So we have an AM. Oh, you know what? I don't even have a fudge. I don't even have a PM end of day expiration on the NDX. That's interesting. Let me see. Well, that's a 0. I mean, I don't know. I doubt this is going to get filled, but let's try the same thing. So if I did clear this, put in my call spread. Let's go a little bit longer. So I go 19.5. So 19.5.
Honestly, I don't think you should take this trade.
I don't think I'm going to, but it's offering $1.55 right now. But it's an AM position, which usually like open interest and fills are a little sloppy. This is also outside the expected move. And an AM expiration, if we gap higher, like I'm screwed on the trade. So that doesn't give it time to settle in at all. And this is around that expected move. Let's see if we're at 19.5. So 19.550 would be from current price around another 0.7. Honestly, I see this one, Frank. See this gap, dude? Like we have that high from Thursday, but I see this gap right here. That's probably more so where I would be put. If I'm going to take a second look at this, that is possibly a target that the bulls can come and take out because we can fill this gap. But if I put it up to here, that's around 19.8. That's obviously further out. That I'd be willing to take that trade. Do like a 19.8 pin price. That's a 2% move. I'm going to take that trade. I'm going to put it at 19.8 instead of 19.550.
What if you
What
did tomorrow AM is
Okay.
when it expires, and you did 1920 put, you buy, 1910 you sell put, 1890 18990 is where you buy the next put. That says 30 cents.
Tell me
But
those. What's that again? You're doing a broken wing?
yeah, but it's a put.
So
It's
you want to
it's
put it
at,
below price.
It's at today's open, yesterday's close.
All right, give me the strikes
they-
again. So you're doing a put. You're gonna do a long put butterfly.
Yeah,
Okay. Tell me the strikes again.
1920.
19,200.
No, 19,020.
Okay, 19,020. Okay. All right. It's way down here. 19,020.
Then 19,010 is where you sell the put.
Okay, so you want to sell. So you want to pin the 19,010.
Yeah.
And 20, and then skip to 18,990. Is that right?
Mm-hmm.
Okay, so 40 cents. This is about a 97% chance of profit. I mean, you get 35, 40 cents on it, but again, the problem is that's such a low credit for that type of risk. So I would probably put this up to like $1, probably $1.50 to $2 a credit. If you're going to take this trade, I like the trade, but I would want to go way higher on the expected tail credit. I'm not taking this thing for 30, 40 cents.
I'm just thinking that today is not going to give us an opportunity for much if we do puts.
Correct.
And if we're just going out one day, I don't think tomorrow's going to be a gap low or anything.
Yeah, I think
So,
this. Well,
I think it's more of a threat to the upside if you were to take a broken wing, in my opinion.
Well, I mean, I don't mind it. Like I said, dude, if I got filled at like 2 to 250, I don't mind the trade because it's not risking a ton. Like I'm comfortable with that risk. If I pin that price and we go another, I mean, we have to go another 2 1/3, 2.5%, which I'm not saying that we can't do that. But we don't really. Do we have any major news Friday?
Nope.
I don't think we do, right? No major news tomorrow.
We're done.
Okay, so tomorrow is nothing. We have sentiment, which I'm sure is going to swing in a crazy different way of like, hey, everyone's bullish again. But okay, so if I did this trade, I'd probably put like $1. I'd probably put 2 to 250 on this one if I did the broke wing butterfly with calls. If I did this one, I'd probably go after like $1 to $1.50 on this one. And that would be a dump of from yesterday's close. We'd have to drop about 2% in order for that to be. So we'd have to go up either 2 1/3% or down 2% in order for those to play out. But obviously, price has to do something to get filled, and that's the other issue. Is maybe price doesn't do anything to get filled, right? How do we get filled in this one? Well, price has to go up for the rest of the day to get filled. How do we get filled in this one? Price has to go down and maybe come and sniff this gap out for that to get filled. So I think if I put the trades in now pending, neither one is going to get filled.
Or you could put them in now. I'm not saying to do this, but what if you put them in now and it was like 30 cents both ways and you had both going? So it'd just be 60% or 60 cents by tomorrow morning.
Because that's $2,000 of risk, dude. That's why. If I'm wrong, like if it blows through the high or blows through the lows, I'm risking $970 a trade. That's why I wouldn't take that trade. So if I ask for $2 on the upside or $1 on the downs, those are, I can stomach risking, $7, $6, but not $9.50, $9.60 per trade. I'm actually,
I feel like you have to go way out of the money if you want to be right.
Well, I mean, they are out of the money right now. It's like the probability on both of these, like, dude, this is a 97% chance of profit with the one that you just said, the 19,010. That's a 97%er. Like, that's way out of the money, right? But the fill is just, it's just so low. So again, I don't love the AM expiration. So I would even take this one step further and go out to the 19th, which is Monday, and do the same trade. Monday is usually not a big crazy day. It's usually fairly contained and pretty range bound. So could Monday be, if I did the put butterfly, we probably could see that it's trading, it's maybe within the expected move. So there's your night. Look at this. A 400. This is crazy, dude. I mean, the implied volatility right now in the NDX is about a 430 point move on the day. By the time we get to Monday, we've maybe gone, 4 to 6. I mean, I don't know. We're getting a lot of IV movement here. So 19.1. Move this up. So 19.1, 19.02. Skip the strike. Right now, they're trading for $1.10. But the problem here is we go from a 97% chance of profit to 88%. And as of tomorrow's movement, tomorrow's pricing, this obviously changes a little bit. So this is something. So how about this, dude? I don't love the AM expiration for tomorrow for NDX, so I'm probably not going to take the trade. But I will look. I think if you and I jump on tomorrow, I would like to look at Monday's expiration, and that way just have the market kind of digest some price action tomorrow, and then maybe look at something where we can pin the NDX on Monday morning or Monday afternoon. Try to get it out of the way, see what the fills look like, get the weekend so you get a little bit of time decay, and maybe we can get like that $1.50 to $2. I don't know. There's my thoughts versus looking for tomorrow.
Okay.
Thoughts?
Yeah.
So I think we can circle back on this tomorrow. Do we not have? I think I saw earlier Nick's not in the show. So are we good? Can we go maybe a few more minutes? You have anything else you want to talk
we
about?
can keep going for a little.
Okay. You mean you're willing to go a little bit longer in a live session?
Yeah, just this once.
Just this once. Okay. Well, let's cherish this, everybody. Frank's sticking around for a few extra minutes. Okay. What do you want to look at, dude?
I don't know if this could be too risky, but I took an out of the money vertical on SMH. It was $1.80, so I thought it was cheap enough for how much I want to risk.
Okay.
But the legs are, it's 242.5 is where I bought a call.
Okay.
And then
what's the expiration for this?
where it sold.
What's the expiration? Tomorrow.
Tomorrow.
242.50. You bought the call. Okay. And then what was the sell call?
250.
250.
So it's not gonna reach it, but I was thinking if it's only $1.80,
yeah,
it's got to go.
Dude, you're up. I mean, you're up 90 cents right now, bro. That's 50% gain. I mean, going into tomorrow, I don't know. If I'm in that trade, Frank, I'm taking profit today.
Yeah, I probably should. I'm up 40%, so I think that's probably what it's gonna give me.
I think so. I mean, because tomorrow, all it's going to do is, if it doesn't go higher tomorrow, you're just going to lose value on what you have today because you still have a little bit of time premium left in it for tomorrow's expiration, and you're up, 40+% of the position. I think that's a good trade just to take the profit. If I'm in the trade, I'm taking profit today. I think that's good enough.
Yeah, I still hesitate with the daily closes, like day trades.
Oh, right. I mean, so if you took it off today, is that going to count? Or I thought you took the trade earlier. Did you take it? When did you take it?
This morning.
Oh, okay.
I mean, I have 3.
Well, dude, I mean, tomorrow's Friday, bro. I mean, it's like tomorrow's Friday. You can't hit the pattern day trading rule when you only have one day left to trade, right?
Well, I can't.
You're going nuts tomorrow.
I'm not going to take. I like having the 3 day trades because you never really know. And I was like, if I lose $180, it's fine for this week because a lot of things have been going well. So it's kind of it's a little risky, but it's not like, I don't think I would be hurt if this happened.
Okay.
So I'm doing that.
What just happened?
We're already up 3% today. So like the move to 250 is about another 3-4%.
Frank, I just got filled on a profit here. I'm just making sure I've got some working order. Let me check one thing here. So I've got a 573. This should be getting filled. So this one's still working. I'll talk about the trade in just a moment. It was reverse iron condor that I did, but it was out of the money. I did like the 550 long call by 560, and I was trying to grab $1 from yesterday. This one is still working. That filled. This one, hang on a second. So this one's still working at 5. I mean, why the hell is this not taking my profit? 570. Let's go 572. Filled. Okay, I'm just gonna get out of this trade for it's around $1. I've got a couple contracts in here. This one filled, so this one should be all zeros. Yep. This one here, pending, still working. Replace. Go to 572. They should fill. No problem. All right, I'm gonna take. It's just under $1. I'm making like exactly $1 or like 99 cents on the trade. This one working. Replace to filled. All right, cool. I'm just gonna get out of this trade real quick, and I'll talk about what it is. So this one filled. Let me check. Pending 572 filled. Very nice. And here, 2 more accounts. Easy peasy. And last but not least,
What was the trade that filled?
I'll show you. So I'm just going to make sure all these positions are filled. So I'm going to make sure these are zeroed out. So those are all zeros. Those are all zeros. Those are zeros. 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 Zeros and zeros. Okay. So the trade was this. So on my software here, I noted yesterday that I was watching a 5. I had 2 big gamma levels on here. So when yesterday was trading, I had a 550 that was, let me make this a little bit thicker. So the 550 yesterday was really lit up when price was down here, and so was the 535. So what I did is I did a 550 by 560 call. So this is the long call, and this is the short call.
Okay.
And then I did a 535 by 525. Oops, 525.
Oh, is this like an iron condor kind of?
Yeah, but it's much wider than usual, right?
And you wouldn't realize any of it until it really moved out of there.
That is correct. So what I did, so I took the trade for $4.70, and today it's trading for $5.70. I was in 2 contracts. I'm just going to take the profit, because as we're getting this run to the upside, you know, what's happening is my deltas are changing on the sell side, that it's not giving me the realized gains until later towards expiration, which was going to be out towards the end of the month. So I'm taking the profit today. You know, it's a 21% gain in a day. I'm going to take that versus now price has to keep going up and keep cooperating. If price comes back into that dead zone between 535 and 550, to me, that gives me no money. So I'm just going to take the profit. So it was it was a wider trade. What I should have done, in all honesty, was pay a little bit more for it and just let the upside with the trading it here. If I did the 550 call only,
you kept your calls, your buys like close to the money.
Well, if I just did the out of the monies and didn't sell it, if I just did this, I would have been able to close it out first thing this morning, because it went from, I mean, this was trading for like $2 yesterday, and it's trading for $6 today.
That would have been expensive though.
It would have been. That's why I didn't take the trade. That's why I sold the 560 and I sold the 525, because it only cost me $4, 4 and change to take the trade. So anyway, I'm just happy. Like that's one trade that's out, and then I have another one here. I'm still running with a 555 call right now for my account, which might be up. If it's up like 50 cents, I might just take the profit. Let me check something real quick. So here, SPY, I'm up $20. I don't know. I might just take the profit. Let me see if I can get out of here for like 70 cents. Well, actually, you know what? I'm gonna do. I'm gonna take a page out of Nick's playbook and just move my stop loss. How's that? So here,
trailing stops.
What's that?
Trailing stops.
Exactly. So I got in for 46 cents. I'm going to put in a stop market. I'll do a stop market this time, and I'm going to put my stop loss in at, let's do 50 cents. Review. Already closing. Oh, yeah. So I've got this one at $2. Let me just replace this one. So this will be a stop market at 50 cents. That way it's risk-free. So if the trade just wants to keep grinding higher, then maybe this becomes 75, 80, 90 cents. I was willing to take profit around $1. get a 100% gain on the day if it's going to drift higher. But now it's break even, so there's no loss in that trade. I'm going to check one more with you while we got a few more minutes. So I've got another trade on the SPY. This one is out to September 30th, which this is the one that you and I talked about on Monday, the 537 by 557. Right now we're trading at 551. So there's still a little bit more upside here, but 553 is my break even. So right now, I bought the thing for 1640. It's trading for 1690. So obviously I'm not going to close it yet. But I will be watching this one very carefully to see if we end up stretching towards like a break even or better. I've got plenty of time premium left in the trade, but I guess we're looking to see like how big and important that Thursday, August 1st high is going to be and how significant it is for the market. So anyway, there's time in that one, and that's also going both ways. So I'm good on that one. And then I've got ratio spread on the SPY. That is a, what's this? That's a naked put. And then the 465 by 400. That's a sell, but that's a wide credit spread for some credit there. October 31st. And the 5, that's a hedge. So I've got hedges there, took the profit today. I've got the reverse iron condor out to end of September. So I think I'm good, man. I mean, I'm up 23 grand on the day. That's pretty good. And
Yeah,
hopefully there's more to,
that is
more to
really
go.
good.
Yeah.
Um,
So, all right, man. What else you want to talk about? Anything else? We got a few more minutes. I'm good for another 10. Go right into one other session.
I don't necessarily have anything else I'm looking at.
Okay.
What have we not talked about, I guess?
Well, let's see. Oh my gosh, is this right? Is Alibaba back? You son of a gun. So I took a trade on Alibaba, 82.50 by 80. Man, freaking China just can't get out of its own way, dude. It's killing me. So
Oh, yeah,
Alibaba
it
was
came
up
back.
to $82 and it's fading. I mean, I'm just watching this one closely. I wonder. I wonder this. If the dollar gets weaker, this is kind of a bigger picture talk, but if the dollar gets weaker and the Fed's going in a cut cycle, one thing I think we need to look at is the dollar versus the yuan, because right now, what is happening? Okay, right now the yuan is showing some strength, the dollar is showing some weakness, but I don't think this is really dollar influence. I think this is mostly the Chinese yuan getting a little bit stronger. I do wonder if the dollar gets weaker, if this, I mean, I do think there's a lot of manipulation in the Chinese yuan, along with what we do with the Fed and all these central banks are doing crazy stuff. But I wonder if a weaker dollar is going to change the, import export game for China, if it helps the economy a little bit. China has been, to me, technically one of the better markets to look at, but man, it is just not confirming anything. So if you look at FXI, I mean, technically speaking, I really do like this trade. So from a weekly chart, we're back to levels we haven't seen since 08, which is why I'm long FXI. The problem is we're just not getting the follow through. Now, this is another one that I'm willing to own this ETF. I've repaired it a little bit. I think I've got ones out to the end of August. So I think I own the shares. Let me 2650 is what I have right now. FXI. So I own the shares. I'm trying to get a call away at 2650 to repair because I'm just not confident yet that China's ready to rip. But man, I do want to watch this closely because if this is going to show some promise, going from 25 back to 32.50 is a decent little gain. And if I'm right on this as a double bottom, that low to high, measure that move. I already got the box right there. If I buy this thing, Frank, at 25.75, my measured move on this is out to 45 and change. So I mean, I don't know a lot of stocks right now that I could look at. I don't know an index in the US right now that I could look at and say, I'm confident we have an 80% move higher. There's not a lot of stocks in the US I can say that about, right? Like, unless you're buying garbage and be like, what about GameStop? No thanks. I mean, 80+%, I don't see that in a lot of major liquid stocks that have already been just ripping since 2023.
You don't see the value in GameStop? They're no longer a video game company. They're a technology company.
I bet they are. I mean, look, if they stay in business, I can get a free PS5 controller. So good for me.
Yeah.
Other than that, I don't give a crap about GameStop, and I think the whole thing is stupid.
Yeah, it's a bunch of trash.
I never want to chase it. I was long GameStop around $17, and I got out well before brokers were closing up and Robinhood wouldn't let anybody in. You can only sell your positions and all that drama. So I don't know. I had a little intuition that something fishy was going on in the background. And when they started locking people up at $480 and you can only sell it, and what a crazy, again, crazy, stupid story, kind of like what we had on August 5th. But anyway, my point is Alibaba, I'm willing to own some shares. I own some shares right now of Baidu, which is hanging in there around 85. You can see I've got some positions when I'm, typing all this stuff up on my charts, but I own the shares right now at 92, and I'm not trying to get in the way of it, because this is another one. If we start to see something good happen here, we've got some lows. This even coming back to the same highs around 160. We're trading at $85, dude. I mean, that's nearly 100% upside. Yes, I want to be in the stock. Yes, I want to own this thing. And yes, I will repair it if I have to. But I do like the stock, and maybe, if anybody's watching this, it's like there's no confirmation to be long, and maybe I'm way too early. But if I'm right on this in any way, shape, or form, this is where some serious alpha is going to be sitting. So maybe it's not just gold, maybe it's not just Bitcoin. But man, I think if there's any type of inflow into non-US, I do think China could be a big beneficiary the next, maybe a couple of years. I did take a position in EWZ. I don't know if you and I talked about it this week, but this is Brazil. This is an ETF on Brazil. If you look at the historical performance on EWZ, this one tends to perform very, very well during U.S. recessions. So I'm early, but we're also talking about levels that, here's your 2008 crisis. We're sitting right at those levels. So I'm not saying the U.S. is going into recession, but I think it's more probable than not that, give us 2 years, I think something's going to break in the U.S. Give us until the end of next year, something's going to break in the U.S. I don't think that we're on a sustainable path right now. I just don't. That's my personal opinion. I think we're going to have some type of reality check, because we have had more booms and busts in the last 6 years of trading than I've seen since. I mean, I understand 2000, 2001 crash, recession, nasty .com burst, tech bubble burst, 2008 brink of financial collapse. Okay, fine. 2020, like ever since 2018, dude, this market's been like bulls pop, all these bubbles, it's like it's nuts what the market's been doing. And I don't know. I'm not that confident in the US's ability to maintain, $35 trillion in debt and having some type of likely fiscal crisis where we can't buy our way out of everything. We can't print our way out of everything. And I think it's more and more apparent that people don't want US treasuries when they want to have gold and other assets. So that's maybe some doom and gloom, but it's just a reality check that I don't think the US can run hot forever. I think that, consumerism at 70+% of our GDP, if people are feeling the pinch and they're going to slow down and start, only buying what they need instead of what they want, that changes the dynamics of our economy. And also,
so that's why you're looking to China and Brazil.
I'm looking for China. I'm looking for Brazil. I'm looking for energy. I'm looking for value. I'm looking for dividend stocks. I'm looking for stuff that's just done nothing. I'm looking for commodities.
What about India?
India. So I don't know what the main India ETF is. I know it's out there. It's already had a pretty good run. Is it just Indy? That's
I'm
the
not
top.
really sure.
So it's the Nifty 50 was good until it crashed. But there's the Indy, which is
INDA.
IND. There's INDA. There's IND. So this is a MSCI one. I'll just try this one, just Indy itself. Why would I not buy Indy right now? Because it's sitting here near these highs that we haven't seen since 2010. So China sitting near like 2008 lows. Indy sitting near these highs. Anyway, that's why I'm not in India, because it's already at highs. We've had a big run in like some other smaller stocks, like Venezuela's up a ton, Argentina's up a ton. I'm not really in that. That's not my space. Like non-US to me is okay. So consumer staples, right? And being pretty defensive, maybe utilities, maybe industrials. But you don't really make money in those in the US when we have a downturn. You just don't lose money. They can maybe outperform, but outperforming, here's the difference. Are you outperforming if you own stocks that do this and the rest of the market does this? You're outperforming, but you're not making money, right? So what I'd be looking for is I'm looking for something that can actually go up as we go flat or we go down. So
it seems like all of the stock markets are basically correlated.
They definitely are. I mean, how much? I guess I look at it this way: can China get worse? Yeah, it can get way worse. But if I own an index at $25, and I take it to 0, okay, so I'd probably buy 10 of those. And if I own an index at $25 and I take it to 0, okay, so I'd probably buy 10 of those. And if I own an index at $25 and I take it to 0, okay, so I'd probably buy 10 of those. And if I own an index at $25 and I take it to 0, okay, so I'd probably buy 10 of those. And if I own an index at $25 and I take it to 0, okay, so I'd probably buy 10 of those. And if I own an index at $25 and I take it to 0, okay, so I'd probably buy 10 of those. And if I own an index at $25 and I take it to 0, okay, so I'd probably buy 10 of those. And if I own an index at $25 and I take it to 0, okay, so I'd probably buy 10 of those. And if I own an index at $25 and I take it to 0, okay, so I'd probably buy 10 of those. And if I own an index at $25 and I take it to 0, okay, so I'd probably buy 10 of those. And if I 100 shares, couple hundred shares, I'll work it. I'll trade. Look, I'll trade FXI like I'm trading the SPY, but instead of being $560, it's $25. So my dollar cost averaging on that is a little bit different because I'm not starting out huge, but the ability to not tie up 50 grand or 25 grand in margin, it just gives me a better starting point with what technically looks like a much better opportunity. And I just keep going back to these levels where it's like, we are back down to the same horrible lows we were at in 2008. And I get it, man. Like China, nobody knows if it's real. Nobody knows if all the bookkeeping is accurate. You don't know. But I do think that China is playing the long game with being number one in the world, and I don't think they're going to let their economy crumble. I don't. I mean, I think the U.S. needs China. I think they need us. I think they need us to buy everything. I think we need them to make everything.
I think you're right.
So
I
I
think
just
it's going to take a lot of time. Like you never know when things can turn around for it. So you could just
Sure.
be stuck in it for a while. But
I could be.
think you're right.
But here's what I'll say. If I'm looking at this, just let's talk investing for a second, which means I'm gonna have to have a horizon of maybe 3 to 5 to 10 years. If over the next 3 to 5 to 10 years, I own a stock at $20 that my price target's up here at $50, there's money to be made, right? That's it. Like if I look at this stock or index or this whatever, if it's 100% just in the ownership of the ETF, great. But if I can do options on top of that and I can juice this to maybe making 200% or more, fine. I mean, there's I just look at it like it's an opportunity that I'm not ignoring. I think that from the technical side, it looks promising to me that we had a rip here in early 2024. We've pulled back. We're stabilizing here on the backside of this trend line. And so am I willing to take some shares? Yes and no. Like, do I want to own it right now? Maybe. And that could be the start of things. But I think I'd wait for a little bit more confirmation to say, okay, we got some good evidence now. Otherwise, if it just comes back and retests the lows, I will definitely get way more involved here. Easy trade for you, or for me, but sharing this with everybody. Staggered credit spreads. If we're trading here at the lows, doing at the money or in the money and just do like 1 month, 1 month, 1 month, 1 month, 1 month, and go out like 4 or 5 months. I've done that so many times, and this ends up making like 3 to 4% gains, and all price does is go up. And so I can sit here and hold it and own the shares, but to tie up way less capital due to defined risk having small accounts, you can make really good money over like 3, 4, 5 months on one position. If it was FXI, KWeb, BABA, Baidu, across the board, I could see my account being up, 10, 15, 20% on just doing option trading.
All I can think here is
worth doing it.
If I were to do it, because I don't really know too much, is buy on the way up and then keep selling calls.
Yep. Yeah. Not bad. So
if it went down, I don't really know what I would do.
If it went down?
Yeah, I don't know if I would want to pick up more if it kept going down.
Yeah.
I think I would like to buy it on its way up, but you don't really know when that's going to be.
That's true. So, yeah, I mean, I look at it this way. One thing you do with options, if you bought it here and you sell a call, if that call's threatened, roll it. Like roll it out, roll it up. If it gets called away, then just recenter the position and campaign it again. But like I said, the nice thing is my measurement is not just this level, but this level. So if we have a double bottom, that move is going up to the center high and up to a higher high, which puts this around, $46. So I like that potential upside. So is this, me supporting the idea that everyone needs to be in China? No, because most people I talk to, they're like, it's uninvestable. I'll never invest in China. Okay, that's your preference. But I'm looking at this as I think there's a good technical opportunity to be exposed, right? And what's crazy, and I don't know if you know this, did you know that 60% of the global market cap is US based? That's how large the US is. We're ridiculously big, dude. So yeah, I mean, if the US is starting to like struggle or go down, I mean, it's going to drag everything with it. I understand, but there could definitely be diversification there where it's not just all US, all US, all US. I mean, we're essentially a tech country now. Like our index, our stocks, SP500 is not 500 great diversified stocks. Like it's, 10 tech stocks and then sprinkle in some other big ones like a Berkshire Hathaway and, a Chevron and ExxonMobil. I mean, our diversification, I think, is very little compared to what it used to be with the idea of a broad market. So just
Yeah.
because our big stocks are just ridiculously big, they're gargantuan now.
Yeah.
So, anyway, all right, we can save that whatever that conversation is. Maybe it's just like I don't know what they're talking about.
We
can
kind
do
of
that
trailed
later.
off, but
We did, whatever.
we were talking about other markets like China finally seeing the sun, and then Brazil.
Yeah.
But yeah, I don't
Which-
know. I just don't know anything about it. I don't know much about China. I know
Mhm.
nothing about any other country's stock market for the most part. So I just kind of stick to the US.
Stick to it. Stick to itiveness.
Yeah.
All right, dude. Well, hey, I think we should wrap it up here. Let's if you want to come back and do it tomorrow, I do want to take a look at those Friday, Monday trades like we talked about for SPX, NDX. Take a look at those, maybe broken wings for Monday. And I want to see
Okay.
how the rest of your trades are doing. I might have a couple other profits rolling in by tomorrow. I should have SMCI for full profit. If Pfizer gets over $29, get that called away for some profit as well. So yeah, we'll take a look at stuff tomorrow. I also am pretty excited that the IWM has picked up some slack and not sucked today. So we're up on the levels. My RUT trade, I've got a pin here, some broken wings that you'd be happy with. 2050 and 2100 are my pin prices. So those are out to the 23rd and the 30th. So
Nice.
all right, looking forward to do it tomorrow.
Yeah. Let's
All right.
talk about it then.
Sounds good. Thanks, Frank.
All right.
See everybody.
Thank you. See you later.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.